Welcome back. Welcome back. All right. Let's make sure those balls are still there. So far, I haven't really broken that. What's ETH doing? Consolidating at a high. Welcome back, y'all. Welcome back. Yeah. Let's take a look at our range. Take these off for now. Welcome back, y'all. I'm focused right now on if we'll break 70 more than anything. Yes. I would have liked to see a bit of more aggression from Asia. Where is Mm, do this. Mm, I'm trying to see if I can finish this deep dive up in a second here, but I'm probably going to save it. Oh, I'll do it tonight. There's not supposed to be class tomorrow. I'm not going to put y'all through that. There's been a little narrative I've been kicking around in my head for a while. I need to get it out. The semester will start back up before you know it. This is going to give me more time to work on deep dives and stuff too. Coming up, what's going to be more important is staying on top of narratives. Test is done. Just waiting for y'all tomorrow. It's fine. It's a take-home test. I know some of y'all are gonna want to do it right away, but no pressure. That would be funny though if everybody calls in sick tomorrow. Yeah. Damn. When's the last time you saw that? All alts running together at once. Yeah, alt season, just think of that, but it lasts like 4 months. Just every day. So very interesting, right? We look at this is on the hour. We look at the top 100, or actually let's look at all of them. Look at the amount of coins that did not get to their extension, right? The ones that didn't pump per se. Like on the 12-hour, right? There's plenty that are only halfway, which means for the most part, if their RSIs didn't blow out, they didn't have huge moves, right? But then break it down to the top 50. Not a lot of stagnant sort of movers, right? TRX just, I mean, how much more do you want this thing to pump? But for the most part, everything in the top 10, in the top 50 got to move, got at least a push. It's just an example of if you're holding an alt portfolio and you're scattered out throughout the entire industry, then the chances of you holding some of these, right, are way bigger. No, Serbo. In my opinion, we didn't. Nothing changed today except for a liquidity sweep and some clarity. And sentiment, obviously. Other than that, we're just at the upper level of a bad place. Before we were at the lower level of a bad place, and now we're at the upper level of a bad place. I'm good, man. Getting ready for vacation. Excited. Oh, I did want to check that. Yeah, I'm sort of glad that I planned the vacation already because I would have probably tried to find an excuse not to go, you know? So it's a good thing. I didn't do anything crazy today. Oh, actually, that's really good for the legacy. Yeah, I should be able to keep it going. At the very least, if it knocks off, it won't be off long. I don't expect it to be too long between times of me checking the chart. Right, let me try to finish up this. Let me finish up what I'm doing real quick. I'll show you guys. Mm. No, that's not what I wanted to do. Yep, momentum is king. That's what makes me feel good knowing that Anybody that was trading anybody that was trading the strat didn't miss this move. Unless you just weren't here. That's different. The reason that it feels good is because that's the main purpose of the strat. The main purpose of the strat is to give somebody the ability to not miss out on the major moves, even when they're just learning, right? When they're just starting out and they might not understand what to look out for a major move. They might not know the early warning signals. They might not know anything except for tracking those EMAs. If you were watching the chart last night, right, we were on the 15 minutes, so it was set like this. If you were watching last night and you got in on that flip, you were only sitting here for like 3 candles before shit went crazy. Yeah, this definitely. If you weren't here for US session, this one caught you off guard. There were people who knew beforehand, though. Like I said earlier, the mega whale wallets over $10,000, over 10,000 Bitcoin, um, hit 2 all-time highs. Well, hit an all-time high a week ago, and then yesterday before the announcement, like 10 minutes before the announcement, we saw a huge spike in Bitcoin whale wallets. Like 10 minutes before the Fed announced or before the Treasury announced. I already screamed at Jarvis. I said that you see that type of whale activity, you interrupt no matter what's going on. The Treasury announced that they're going to double the amount that they're putting into bonds. So they're basically going to double the money printing to buy back bonds, seen as a stabilizing force, right, to the debt market. I think so, yeah. Just because the liquidity came in doesn't mean it stays. And until somebody can answer the S&P NASDAQ question for me, I'm about to go into a little deep dive right now. And we'll discuss it. What's going on, Lane? Mm, This will probably be my last deep dive before I go on vacation. The timing is inconvenient. If that chart moves, you will hear my voice. It would have been nicer to be able to take my vacation and not be thinking about the charts at all. But first of all, that was never going to happen, even if we were just going sideways. But more now, specifically, yeah, I'm going to be focused. I'm going to be at least tapped in. Nah, YouTube will still be up. Hopefully, we'll see if it stays up. So, H. You imagine? She will be snitching though, so you've been warned. I can count on her to have a list when I get back. I'm just glad that I'm not doing any planning, Like literally, my planning stops at just getting all my family together on the first couple days. Then after that, it's a mystery mission. Only instructions that were given out was we're going somewhere hot, somewhere cold, somewhere new, somewhere old, and bring your passport. Looking forward to shutting my brain down for a week, I hear you. I hear you. It's been at least 5 for me. Completely voluntary, though. I mean, that's, you can't complain. I did it to myself. Sometimes you just got to lock in, bro, you know? But we do got to be careful with that shit, too. Even too much of a good thing. Just everything we talk about, right? Protect yourself against being wrong. Right now, we're not in prediction phase. This is, excuse me, less predicting, more reacting, right? Because we're trading by momentum until market maker is back in control. It's possible we get to Friday, we set a traditional trap, market makers back in control. You have a boring weekend in front of you, your false move and your 3 day, and then I'm back. Best case scenario. Worst case scenario, the world turns upside down and fake a heart attack to come back home. Because it's aggregating all the other exchanges, CM. So, like on lower liquidity exchanges, right, there could have been a higher high already. What is my phone doing? I mean, you can. Yeah. You could hedge the move out of the weekend trap. Um, it's just you have to actively trade it though. Like I'll give you an example. Let's say you were at 50% of this weekend, because you would imagine the best place to hedge would be smack dab in the middle of the range, right? So let's say you decided to hedge the false move, but then you walked away from the PC. You would have got taken out long and short there. Bang, bang. So one of the things that I like to do, depending on directionality, is usually when you take out those trap longs, there's a move back into the range before a continuation. So instead of trying to predict it, you know what I mean? Or you can buy the type ones, type twos, and then hope you break out, and then your stop loss is underneath your type two. If you have a false move down, it's going to stop you out. But if it goes, you're already in position. But yeah, you got to be careful because remember at 5 on Sundays, for the most part, when that volatility comes in, it can get super choppy. Man, I think it's gonna be crickets unless y'all just get super bored and get in there and start chatting. But it's been quiet lately. Y'all better not. Leave for a week and everybody loses all sense of risk management. You know, Trump said prediction market 2 more times than he said the word Bitcoin today. Like, when did fighting for prediction markets become part of our crypto platform? That's a good point. Of course, they'd be fucking. Pardon my French. Of course, that would be top of the docket. Now we just gotta respect the range while it's ranging. Value area low. We just hit point of control. So value area high 697. Unless this uptrend does its job. I definitely think he's got something else up his sleeves before the presidency's done when it comes to crypto. Think about it. Why would you fight so hard against this ethics bill if one, the ethics bill isn't retroactive, right? So anything you did before it is not affected by it. And he's leaving and he's never going to come back, right? Because he can't. So why would you stall the bill and fight so hard against it if you didn't have one more little trick up your sleeve? I wish I could see his team of lawyers. I wish I could see their faces when he starts to say shit like, "When I'm president, stocks pump 40%." But brother, you do understand that people are already accusing you of manipulating the market. I don't think standing up there and taking credit for it, you're not making her job any easier. All right, so this is done. We'll get into that deep dive in like 5 or 10 minutes, y'all. Bro, my brain is so fried from all this shit. Like 3 days from now, I'm gonna send you guys a deep dive from vacation on whatever hotel I'm staying in or something. It could be that too, and it could just be like no because you guys want it. I don't like you. The importance of touching grass. It'd just be me frolicking through a field of flowers or some shit. Look at him go. What, a grown man can't frolic? What the hell? I'm telling you fellas, they don't want to see us happy, bro. Job's not done, bro. You know? Bro, this shit has been a joy. Bear market was much needed, bro. What shit I got accomplished? Like, I honestly, that's probably what I'm gonna spend most of my vacation doing. Just sitting back and looking at the last year and letting it all sort of sink in. Because I really haven't yet, bro. I've been from one thing to another to another. And I really haven't spent any time at all, like, absorbing it. You know what I mean? That's a catchy name. Subprime 401k. It's provocative. Gets the people talking. Yeah, we're gonna talk a little bit about that right now. Yeah, I wouldn't be I wouldn't be shooting for them unless we see weakness. Momentum is king right now. The next real, in my opinion, the next real chance we're gonna get to revisit that is gonna be on the traps on Friday. The thing is, after a push like this, you would expect a retracement anyways. So even if we get a retracement today, tomorrow, it's hard to call it midweek reversal. Right? It's gonna have to be something obvious like the trap setup. before we can gain some confidence that market makers back on the sticks. All right, let me get rid of this. Mm. You got to be impressed with these people sometimes, man. Government. It's like no matter what, at the end of all of these housing cycles, they find a way to leave a different group of people holding the bag. It makes you think what they were thinking while all that was going on, right? Like they're watching and they're like, these idiots are attacking this shit when they should be milking it. Bro, that dude gives like hardcore clone vibes. Just something about him looks like AI. Yeah, it's bad. Right, let me get this, and then we will jump into this deep dive, the last deep dive before your boy goes to shut his brain off. Scenes. I just don't appreciate them pulling all this shit after I set my reservations and everything. That's how the universe works, bro. Universe knows I would have just used it as an excuse. I would watch bonds, right, during the next week as well. We want to see if this is actually going to work, right? Bond yields should go down and continue to go down. If they don't, then we've got bigger problems. Yeah, I doubt it too. So in 2008, when the I'm gonna get into the deep dive now. So if anybody's on Discord, just come on to my stream. In 2008, when the housing market crashed, the amount of debt, right? The debt bubble that had sort of grown at that point was out of control. And the problem is that when debt gets bad, people don't pay it, right? You run that third party counterparty risk when you're holding debt that somebody's just never going to pay off their debt. So what happens is you have to find a way to you have to find a way to pin that off on somebody else. Right? In 2008, what they did is they started sneaking all of those subprime mortgage loans, right? Or mortgage loans that were given to people that had no jobs, no income, right? Um,
they started bundling those loans with good loans, with loans that were given to people who had jobs, who had a regular history of payments, but without telling the banks that they were being bundled, right? Without telling anybody that they were being bundled. So what ended up happening is people ended up making what they thought were good investments that had, securely been good investments over history. But there was so much toxic shit in them that when shit hit the fan, everything sort of unwound. Um, we've got similar levels of debt. I've said it from the beginning that this isn't going to be a 2008 style crash, right? We've put too many safeguards up since that happened for it to be as widespread as that. But the need to shuffle that debt, um, the need to shuffle that debt doesn't go away, right? Nobody wants to be held holding that bag. So today we'll go into a deep dive into, first of all, the AI bubble, right? Because that's what's bubbling, and how I think they're planning on shuffling all the debt back to taxpayers through this bubble. We'll do a quick overview first, and then I'll get into a little bit more specifics. Let me make sure that this is where it needs to be. Hold on. Remember when we talked about the Bollinger Band squeezing and how it usually led to a drop, but there was a move up first before that? Yeah, it sort of fits into that sort of idea. Right. This is the same. This is where it happened last time here. Right around here, the Bollinger Band squeezed and then it popped. I believe I think I did this already somewhere. Yeah, here, look. These yellow lines are all the times that it squeezed in. And then this bull market, we've had pops after the squeeze and then drops 6% on top. This one was 10%. Squeeze, popped, and then went. And then now, so far, we're looking at like 5%. This one. Yeah, the overlay that we were using was basically this one. Something like that. Yeah, we just gotta wait for the reactions, man. Let's while we're trading momentum, you've got to be less predicting and more reacting. So market makers back in control. All right, family. Let me get rid of these logos. I'll probably do this deep dive again tomorrow, just because it'll be the last class, and I don't want it to be so quick. And then we'll do the test after. But let me get it out now. I still gotta edit it. It's pre-edited. Gotta cover up all the shit and socials. That's gone. That's gone. All right. That's the problem, right? That's sort of the angle that I'm looking at, is that a lot of the safeguards that were placed in 2008 don't necessarily apply to the angle that I think they're going to take this time. But let's watch. Yeah, my bad. That's irresponsible. Let me make sure everybody can hear first.
Yeah, I noticed something today. There's a new thing going on. AI biotech.
That's on. All right, let me make sure everybody can hear properly here. Hold on. Oh, that's the wrong button. But everybody hear that? All right, good.
Yeah.
This is the new architecture of global finance. Massive, power-hungry data centers filled with thousands of experimental GPUs. Big tech is currently spending hundreds of billions of dollars to build out this infrastructure in a race for artificial intelligence dominance. Many of these companies avoid taking on construction debt directly by signing long-term lease agreements with third-party developers. Under current accounting standards, these trillion-dollar obligations are treated as service contracts, keeping the true scale of liability off their balance sheets. The developers building these sites rely on a massive $1.2 trillion shadow market for funding, a pool of capital fueled directly by the public's life insurance premiums, pensions, and annuities. This chart shows asymmetrical risk for the average policyholder. While your potential upside is limited to a flat 3% return promised in your contract, the downside risk is unmitigated. If underlying AI loans default, your retirement security carries the total loss. The AI revolution is not being bankrolled by the surplus cash of Silicon Valley. Instead, the retirement security of the American public is being used as the ultimate safety net for a speculative tech bubble. To understand how a premium payment ends up in a server farm, we have to look at the float. When you pay for a life insurance policy today, the company collects that cash now, but likely won't pay a claim for decades. Historically, insurers kept this money in safe government bonds. However, after the 2008 crisis, a decade of near-zero interest rates made those safe returns vanish, forcing insurers to reach for yield in riskier private credit markets. This diagram shows the journey of a single premium dollar. Private equity firms began buying insurance companies specifically to capture this float and use it as permanent capital, money that stays in the system for years and can be invested however the managers choose. This creates a profound conflict of interest. The private equity firm originates a loan for an AI project, extracts a massive fee for itself, and then sells that risky loan to the insurance company it already owns. By using insurance premiums as a private bank, Wall Street has transformed a regulated industry meant for safety into a captive funding source for speculative tech ventures. Following the 2008 mortgage collapse, the government built defensive shields to protect the public. Regulations like risk retention were designed to force lenders to keep skin in the game, ensuring they couldn't just bundle bad loans and sell them off to others without consequence. But the financial industry has found a way to move billions of dollars in AI infrastructure debt right past these post-2008 safeguards. The SEC recently clarified that because an AI data center is a physical building, the loans used to build it are not classified as asset-backed securities. This single technicality means the strict transparency and disclosure rules from the Great Recession do not apply to the AI market. To further obscure the risk, insurers move these liabilities to offshore reinsurance affiliates in Bermuda. Beyond the reach of state regulators, these affiliates use internal models rather than market reality to value their debt, effectively hiding it in an offshore black box. By combining domestic SEC loopholes with offshore accounting tricks, the financial sector has dismantled the very shields designed to prevent another systemic collapse. We can see the fragility of this system in Japan, where rising interest rates have left major life insurers facing $96 billion in losses. While Japan's losses are in transparent government bonds, the U.S. market is saturated with opaque, illiquid AI debt with no clear market price, making the potential pop of this bubble far more dangerous. When the speculative data center loans default, the impact moves through the system in a predictable sequence. The over-leveraged life insurance company becomes insolvent, unable to pay the claims of its policyholders. This triggers the State Guarantee Association framework. By law, every other insurance company in the state is forced to pay fees to cover the losses of the failed firm. To reimburse those companies, the state provides them with massive tax credits against their premium taxes. This siphons billions of dollars away from the state treasury, leading directly to cuts in schools, roads, and public services. Wall Street has engineered a machine that privatizes the profits of the AI boom, while secretly wiring the detonator of a market collapse directly to the American taxpayer. Your retirement security has become the ultimate safety net for their risk.
Fam, there's a widespread theory floating around right now that the stock market is being propped up entirely by the AI boom. That's not wrong, but it's missing the actual story underneath it. The AI infrastructure itself, the data centers, the GPUs, the power contracts, is being quietly funded by a much older, far more traditional source. Your everyday life insurance policy, your annuity, your pension. Somewhere between your monthly premium and a hyperscale data center, a $1.2 trillion hidden debt structure has been built, layer by layer, largely out of public view. And here's the part that should actually concern you. If this structure fails, the loss doesn't hit the banking sector the way it did in 2008. It bypasses the banks completely and lands directly on the public, on retirement accounts, on state budgets, on people who never bought a single share of an AI stock in their life. This is the dark pipeline. We're tracing the entire route, dollar by dollar, from the moment it leaves your pocket to the moment it's locked inside a data center for the next century. Here's how your premium actually gets weaponized, mechanically. The float. Insurance companies collect your premium today for a claim they likely won't pay for decades. That massive pool of available cash sitting idle in the meantime is called the float. Permanent capital. Unlike a regular bank deposit, this money effectively never leaves the system, making it the perfect fuel for long-term, highly speculative investments. The unfair trade is where it turns predatory for you specifically. This deal is upside capped and downside unprotected. If AI infrastructure becomes the most profitable asset class in modern history, you receive exactly your fixed 3 to 4% contractual return and not a cent more. If the tech bubble bursts and the insurer fails, your retirement security is what vanishes. You're carrying the full downside risk of a venture capital style bet while being compensated at a savings account rate. The mechanism is disturbingly simple once you see it. Visible. AI infrastructure is so expensive that tech giants are spending more than their entire operating cash flow to build it. Hidden. To keep the far larger remaining debt off public financial statements, tech companies simply rent these facilities instead of owning them. Microsoft alone carries an estimated $1.5 trillion in lease commitments, a full $1 trillion of that completely hidden from standard balance sheet scrutiny. The Meta example makes this concrete. Meta needed a $30 billion data center, put up just 20% in equity, and asset manager Blue Owl funded the remaining 80% $24 billion by issuing 24-year bonds. Here's the detail that connects everything. $18 billion of those bonds were bought by money managers representing pensions and insurance companies. Your retirement fund is quietly one of the largest lenders financing Silicon Valley's infrastructure boom. 4 stages. The source, your monthly premium. The reservoir. That premium pools into insurance float. The pumping station. Private equity firms originate massive debt deals using that float. The sink. The money lands locked inside a century bond. Google has literally issued 100-year bonds not due until 2126, alongside other firms issuing 24-year notes. The money gets bundled into illiquid loans that may not mature for generations, and the actual risk, whether a building full of experimental GPUs is still worth anything by 2050 or 2126, transfers completely onto the policyholder. You're not just funding today's AI boom. You're underwriting a century-long bet that won't be judged a success or failure until most of us are gone. Following 2008, regulators identified the originate-to-distribute model as a systemic poison and built two shields. Regulation AB cured the blindness problem. Detailed, asset-level disclosure so investors can inspect every loan bundled inside a bond. Regulation RR cured the incentive problem. Lenders must keep 5% skin in the game on debt they sell. The logic is airtight. If you're forced to eat 5% of the loans you write, you make sure they aren't garbage. These shields worked exactly as designed for 15 years. Then AI infrastructure loans showed up, and regulators quietly found a way to make both shields simply not apply. The carve-out. When law firms asked whether post-2008 protections applied to AI infrastructure loans, the SEC issued a stunning clarification. The ruling: AI securitizations aren't classified as asset-backed securities because a data center is legally a physical building real estate rather than a financial asset like a car loan that pays down over time. The result: neither Regulation AB nor Regulation RR applies. A multi-billion-dollar facility packed with experimental, rapidly depreciating GPUs is now legally treated as less risky than a basic car loan. The public has zero visibility into who holds this debt or its real quality. Over the last 15 years, private equity firms have transformed from investment houses into the outright owners of life insurance companies, now controlling an estimated $1.5 trillion across 134 individual insurers. The strategy: PE firms need massive, reliable money piles to fund lending operations, and insurance premiums are permanent capital. Once a PE firm owns an insurer, it never again has to ask outside investors for fresh funding. Apollo, Blackstone, KKR, Brookfield are no longer just buyout names. They are, functionally, the new owners of a massive slice of America's retirement security. Private equity firms are simultaneously the creators of AI debt and the buyers of that same debt. The Apollo/Athena example. Apollo originates a loan for a massive AI project, collects a hefty origination fee, then sells that exact loan to Athena, the insurance company Apollo itself owns. Right now, $227 billion of Apollo's own originated deals sit inside Athena's books. The misalignment: Apollo earns its fee immediately regardless of loan quality. If the AI company defaults years later, Apollo already banked the fee. It's Athena's policyholders whose retirement funds carry the entire loss. To sell speculative AI bonds to conservative insurers, you need a high credit rating. That rating is literal legal permission for the insurer to hold less of its own money in reserve. The crack: one private equity sponsor is under active investigation following a lawsuit from two former employees, alleging they were pressured to inflate ratings to win business. The number that should worry you most: these private loans don't trade anywhere. There is no open market checking the price. They're worth exactly whatever the internal model, built by the same firm selling the debt, says they're worth. To escape U.S. state regulators, insurers use reinsurance to move liabilities offshore to Bermuda, where capital standards are flexible and disclosure is minimal. $2.1 trillion. U.S. life insurers have moved that sum in reserves to offshore reinsurers. 40% market share. Liabilities moved offshore exploded from 14% in 2017 to over 40% today, tripling in under a decade. Moving a liability to Bermuda lets a company report its value based on its own internal model rather than market reality. This is the direct structural parallel to the offshore vehicles that hid subprime risk leading into 2008. It's a dangerous misconception that insurance failures are purely private losses. 1. AI loans default. 2. The insurance company fails. 3. By law, the State Guarantee Association forces every other insurer in that state to fund the loss. 4. In most states, those competitor companies get fully reimbursed through state premium tax credits against their own taxes. When the state collects billions less in tax revenue, the public pays through cut services, defunded schools, or higher local taxes. The bailout is automatic, requires zero new legislation, and is already on the books. The risk hasn't been eliminated. It's been relocated. Underlying asset: subprime mortgages then, AI data centers and GPUs now. Primary bag holder: banks then, insurance companies and policyholders now. Transparency: low through opaque CDO bundles then, low through SEC exemptions and the Bermuda black box now. Bailout mechanism: direct federal TARP intervention then, quiet state tax credits paid by taxpayers now, with 0 congressional vote required. Same architecture, rebuilt feature for feature. Different characters wearing the risk this time. Japan's 4 largest life insurers are sitting on $96 billion in unrealized losses because rising rates devalued their bond holdings. The crucial difference: Japan's insurers hold government bonds, safe, liquid, with an exact market price known daily. The U.S. threat is structurally worse. American insurers hold $1.2 trillion in opaque, illiquid AI debt with no open market anywhere. If forced to sell, the true value might be a fraction of what internal models claim. Japan's losses are painful, but transparent in real time. Ours are invisible until it's already too late. Fam, this system operates flawlessly under one assumption: borrowing stays cheap forever, and the AI build-out generates historic profits fast enough. By bypassing 2008 safeguards, exploiting offshore black holes, and relying on state-mandated bailouts nobody's watching, Wall Street engineered a nearly flawless risk transfer machine. The private equity firms keep their fees no matter what happens. The tech giants get infrastructure built essentially for free, off their balance sheets. The everyday citizen, the policyholder, the taxpayer, the pension holder, who never made a single AI decision, holds the bag if any of it unwinds. We built a defensive system after 2008 specifically to see the next crisis coming. Bit by bit, quietly, legally, we've recreated the exact same vulnerability with different characters and extra structural steps. The trillion-dollar question: if the era of cheap money disappears, the same way it just did to Japan, how will the market value $1.2 trillion in experimental AI debt with no open market price, shielded from SEC transparency, hidden inside offshore black boxes in Bermuda? Nobody has answered that question yet, because nobody outside the firms holding the debt is even allowed to see it. Track the flow. Ignore the noise. End of transmission.
And until
There's
somebody
a widespread theory floating around.
until somebody can answer that question for me, then I can't sleep at night. Just peacefully thinking that this AI bubble isn't going to pop. And it doesn't even have to pop, right? We're just talking about letting some air out of it. I'm worried. I'm worried that people aren't paying attention. I'm worried that people are euphoric at a time where it's probably, we're not even talking about crypto right now. Screw crypto. Whether Bitcoin bottomed or not has nothing to do with what we're talking about. Talking about the general public, right? Those that have been eating off of this run, those of that have been invested, that have actually been actively playing the market, are loving it, right? And we're pushing it to the limit. But those that haven't, that only have direct access through their 401ks, right? That don't get to TP the top, that don't get to get out of the way, you know, when the party that never ends that we've been throwing finally gets the cops called on it. Those are going to be the ones that end up holding the bag.
Well, they definitely don't know that.
Yeah.
I thought it was investors putting the money into everything.
Well, American people are technically investors through their 401ks. That's why.
I'm more concerned about the life insurance thing.
Yeah, I mean that's obviously another angle.
And that's straight out washing right there.
No, I'm not worried for me. I'm just worried for the people that don't see it coming. There's really nothing you could do for them except try to tell people. We've been planning on this for a while.
Buy good companies and hold forever.
The velocity of money has sped up quite a bit over the last couple months, man. Right now we're sitting at about a 84 day at about an 84-day extension. Towards the end of the cycle, the velocity of money tends to speed up. Put it on 84 for a second and take a look at it and tell me if that looks better. Also, when you get a chance, leave it on 84 and go to S&P and look at the correlation. It's insane. S&P and NASDAQ are like, I could show you. I'm telling you to do it. Like if I don't have it up here somewhere. I think I have it up here somewhere. I'm always on the daily. I don't have it up. All right, I'll pull it up. No, a rocket ship. Mm-mm-mm. Let's put you on the daily. Excuse me. Look at that. 82% correlation to the current time frame, so to the daily. 15% for the week. I mean, we had the liquidity go elsewhere. 88% for the month. 96% for the year. It's kind of sick. And that's basically the same if you look at NQ. So we're in this top chop here. Global liquidity goes sideways. Put it this way, we don't take out these highs until where we are now. Let's just say the high that we just had. We don't take out that high for 80 days. And then it starts again. me get these liquidations on. I'll be right back. Yeah, I mean, the one thing that worries me is that I also think that we're going to get a rate hike after midterms. I think there's a very, very small chance that Trump's buddy old pal, does anything to rates before midterms. They can't cut it. So he's not going to cut it, but he's definitely not going to raise rates before midterms. That'll be bad for the voting booth. But after these midterms are done, that's the last election that Trump ever needs to worry about. Your invalidation is right here for this M pattern, by the way. Midterms are important because they can nullify his last 2 years. If they lose the House and the Senate, then the Democrats will be able to sort of stall out anything he wants to do. They call it a lame duck presidency. The last 2 years, you basically can't do shit because you can't get any votes. I mean, you can do a bunch of executive orders, but you can't, So it's a control thing. Eventually, yeah. And they're easier for the next president to sort of chop up. Shit, be careful. Don't say that out loud, bro. We might not have a choice soon. Eventually, all the cheap RAM you have access to is going to be gone, Robo. I know right now you're probably spoiled for memory. Yeah, we've also flipped the long short ratio. Might as well open up a data center, Robo. Have you looked at some of the DPIN stuff though? Like basically leasing out your rig for a fee on chain. Oh, you said you're dreaming of it. My bad. I didn't read all the way through. I thought it was full. I was like, bro, you can sell heat at that point. Literally, my first deep dive went into his Bilderberg connections. You know, the one that you accused me of not knowing, but then you weren't here for the deep dive. He's not fooling anybody. Imagine trying to fill that shit right now, Robo. Maybe when they build too many of these AI data centers, we'll see a couple of them go up on Facebook Marketplace. Pick up some cheap shit. Yeah, I'll look at Hype. Hype had a decent move after they glazed it for like 15 minutes during the speech. I mean, that's just a good looking chart. That's what a good chart looks like. I would like to see a deeper retracement personally. Not to buy any or anything, because I don't think it matters what price you buy Hype at, but the structure. I don't like how much of this we left. I know we took 50% of that vector, but that's really the only thing wrong with this chart is that fair value gap. Other than that, that's just a beautiful chart. It's a beautiful beginning to a project's life. Let's put it like that. See what we did today. Looks like Bitcoin. They're doing its best Bitcoin impression right now, except it took out its high. Right, it already filled its wick and took out its high. The VPVR obviously is not attractive. This isn't specific to hype though. Any project, doesn't matter what you click on. If you want it to keep going up, you needed to avoid the massive gap that it left behind, unless it didn't move at all. Right, but for the most part, everything left pretty significant gaps behind it. ETH. What a badass ETH was. Hold on, let me see something really quick. Bull market, bull market. All right, where are my ETH pairs? We were just looking at, I was saying that, typically ETH does better than, Bitcoin does better than ETH off the bottoms. But I was doing a little like ETH specific research the other day. And all of these ETH pairs, like ETH BNB, ETH Tron, but more importantly, look at ETH SMP. Right, that's ETH V legacy. So basically, is it better during the next bull market to pick up some ETH, or is it better in the next bull market to pick up some? But look at could this be the spring? And remember, this is against ES. So ETH can continue to make lows on USD, right? But if SMP takes a harder dip than ETH, then this will continue to shoot up. And then look at ETH. Where is it? ETH BTC. Right, we've seen ETH BTC act like an oscillator, basically. So could those have already bottomed, or the pairs, right? ETH BTC, not so much. I think ETH BTC takes another trip down. But ETH SMP, there's a good chance that this is the beginning of something nice on here. And then ETH Dom is the other one that's looking, ETH Dominance is looking very Wyckoff accumulation-ish. You got to stretch it out a little bit. something like that. But this is future, right? This is for future. This is me trying to figure out the order in which I'm going to buy the bottom, right? The proportion of ETH to Bitcoin that I want to bottom out with. I'm not touching ETH right now. I hope that it goes without saying that I'm not buying anything at these levels on anything. But that is a beautiful little breakout. Nah, I don't. If I did, you guys would be the first to hear it. Where's my lighter? Nah, I hear you, Shaw. Never hesitate to ask, especially if you haven't been here. It's important to understand why things pump before you attribute meaning to them that they don't have. Yeah. I still think he's going to raise rates. I just don't think he's going to do it until midterms. Well, if you're so obsessed with me being wrong, in about a week, my archives are going to be out. You can knock yourself out going through my transcripts. That way you can have receipts. You finish that? Let me get some. Nah, that shit is good. You killed that. Everybody ready for their test tomorrow? punch in the air somewhere. His crash out today must have been epic. I wasn't here for it, but I can just imagine his reaction to that squeeze. I mean, he was already timed out by the time that the crypto meeting started, so it had to be epic. I don't think High Def is trading, you know. I think he's safe. Does Sato still live stream? Bears are kind of bold, huh? It's an abnormal amount of aggression after such a violent day. Oh shit, that would be fucking hilarious. I would say pardon my French, but there's no other proper word to use for that. That would be the funniest shit ever. Yeah, I'm gonna put myself on timeout in a little bit here. Yeah, triple top or a lower high would add more sellers to the trade. Need to try to get some sleep these next couple days, or I'm gonna risk getting some serious jet lag. But it's the same way that holding point of control and putting in a type 2 would bring in buyers. Just ranging over a big fair value gap full of liquidations and a bunch of liquidations piling up above. It's all going to come down to what looks tastier. And that's before you even start thinking about the larger expanse. Excuse me. Mm. Let's go see what Twitter's talking about.
Oh, come on.
I haven't seen Bitcoin push up like that in a while. Ethereum was what, 18% yesterday? That's crazy.
The bottom is in. Those guys are out in full force. What's up? What's up? Yo, can you check out height? Yo, the bottom is in. Guys are really talking a lot of smack right now.
My bad, y'all. I'm talking into a muted mic. What's going on, you man?
Oh damn! I thought you were asleep.
Nah, I'm here. I'm getting close to getting to bed, though. I'm trying to wind my schedule down, bro, so I'm not a zombie on vacay.
I was just looking at Hyperliquid to see if it was
I can't hear you, bro. Your mic is bugging out.
oh my bad. I was looking at Hyperliquid. I'm trying to see what's going on.
Whole bunch of consolidation at highs right now. Hold on, let me grab this range. I'm going to the city, and then I'm going on a mystery trip. I don't know where the destination is yet. I'm not planning it. Somebody else planned it, so I was told we're going somewhere hot, somewhere cold, somewhere new, somewhere old, and to bring my passport. What am I doing? There we go. I don't know, but they're about to start charging me extra any day now, Austin. I'm pretty sure. Finder. Let me make sure the size is right on that. Bam. Bam.
But yeah, I did. I know your mic is muted, but I was saying the bottom end guys are talking pretty big right now.
Yeah, you can expect that. This all depends on why you think price went up, I guess. You think price went up because a bunch of people that were on the sideline decided this is it. It's time to accumulate for the long run. Or do you think money came in on a news catalyst that created a short squeeze? They're two different things, you know? Now, can a news catalyst that causes a short squeeze create an environment that makes people come in and want to? Yeah, that's possible. But you'd have to see that play out. And in my opinion, it's not a big enough catalyst to make that. First thing I saw when I went on Twitter today is QE started.
Oh God.
Technically, they're not wrong. But technically, we've been in QE for the past 6 months.
Yeah, altcoin season guys are back too.
I'm more happy for them than anybody, bro. I just hope that people take advantage.
I guess that's the Trump news. the United States is gonna buy Bitcoin soon or something.
Sounds good.
But he said it before.
Mm-hmm. I remember what the unwind on that looked like.
Hmm.
Bro, Twitter they're way past bullish right now, Ghost. They're like euphoric, like hardcore euphoric. It's not even about thinking we bottomed, right? That's subjective. It's the comments that are like, we bottomed 180K by November. And it's like, oh shit, if that's the type of bull market that y'all are expecting, where we're just gonna make all those gains back, within a quarter. There's gonna be a rough start. There's gonna be a lot of upset people 3, 4, 5 months into the bull market that are like, but it's the bull market. Why aren't we at 200K?
And the next weeks we see 45.
Possible. Timing is gonna have a lot to do with this. Like I said, I'm more concentrated on the date than anything else. But if we want to look at my levels, this is
At the
still,
same time,
this is still what I'm looking at. But we have to be clear, that yellow line is the end of October.
sell the wife, sell the kids.
Yeah, if it gets, bro, if that shit happens to get a 3 in front of it for whatever reason, yeah, sell the wife, sell the kids, buy them back at the end of the bull market.
Sell the dog.
Whatever. If somebody's willing to buy it, I will give you guys a cheat code for this, though. You don't have to sell the wife and the kids. That's ridiculous. You don't want to do that. One, it's illegal. Right? But if you give the wife and kids away and then you charge the person to bring them back, that's the play.
So I'm a bit shocked about that leverage thing, because the only option I have now is 20x. I know you're not a leverage guy, but wow, I'm shocked that every platform is blocked in Europe to do high leverage trading. But I assume America is already like that. So
yeah, you guys are just getting the taste of how we have to deal with shit, VPN everywhere, and
Damn. They did that to y'all?
Yeah, that
You still-
Mika shit hit hard, bro.
I can still get 400.
Was basically their Clarity Act, right? Like their version.
at the end of the road is going to push me to do the spot trading, like I mentioned before. But
That's good.
yeah.
Nothing wrong with that. And I mean, if you can't get your rocks off with 20x,
Oh, I can. But
like we're still talking about 20x. That's no, that's no chump change.
But I just like Maxi, the platform, and
Yeah.
like okay, it's very strange. It's nah.
So
Yeah.
your block from going on it.
What do you say?
You can't go on there no more.
I can't go on, but I can trade. Everything I can pull it out for a couple of months, but I can't do the trades anymore.
And the way the MiCA regulations are set, the way they're written, if you trade on exchange you know you're not supposed to be trading on, it's a criminal offense. It's not like
Yeah.
here where you can play stupid and be like, "Oh, well, I didn't know. I didn't know my VPN was on. I didn't know da da da." Yeah,
Yeah, that was an option doing VPN or via DEX. But the thing is, if they know that you're doing it, if they verify you and you have to say where you live, then your account is frozen. So
exactly. That's the trap. That's the trap that I try to tell people that trade perps in the US about all the time. They're not going to say anything to you. They're going to let you trade. They're going to take your transaction volume. But if you hit that one trade, that one good trade, you got 100K, 150K that you need to pull out. All of a sudden, they have questions about your location. You get that little email that says, "We've started to process your withdrawal, but we have a couple questions about your location." At that point, you might as well just cut the app off and walk away. They took it. That's their money. You're not getting that.
And the biggest thing, what's for you guys maybe also normal, is now if I buy crypto, I get an invoice, and if I sell it, I get an invoice. So
Oh yeah, welcome to the.
yeah, so it's all known in the tax office. Like I mentioned, I did it. Oh, that's a big one.
Yeah. And here the exchanges themselves are giving all that information in. So you could not give it to you could not turn it in if you want, but if you get audited, you're gonna have to answer for all that shit. I don't want no problems with the IRS, bro. Straight up. It took out the biggest gangsters in this country, the ones that the FBI couldn't touch, the ones that the police couldn't touch, all got taken down by the IRS.
If I'm as honest as I can be, I have 3 companies that went down on IRS way, if you know what I mean,
Yeah.
and not that they could take me. So if I'm doing illegal things and they come out of this one, it could end terrible for me. So
Yeah.
not gonna do things like that. Belgium is quite easy to make a company and rip off people and close the company and it's finished, if you know what I mean.
Yeah, it happens all the time, for sure.
Play the game 3 times. I did it well. I'm never gonna do it again. But yeah, my crypto heart has broken a little bit. But I just have to spot trade. And honestly, if it goes to 30 or 40, I'm just gonna buy a couple of Bitcoin and yeah, this is what it is.
That's it. Play it cool. And if it gets bad, the world is a big place, man. Maybe it just means you got to live somewhere else. I mean, I love this country as much as the next guy, but at 1000%, there's a way for them to squeeze me out of America. If they squeeze too hard, they will squeeze me right out of the country. It's a fact.
But where would you go live then, from my opinion? Just then for the crypto, in my opinion, also.
Right now, Japan is looking good, man. Japan's new Clarity Act is really clean. Has a lot of consumer protection. Not only that, but if I'm gonna move somewhere, I would probably want to move somewhere with like a good culture shock. Like I want to feel like I spawned in a different server. And Japan just has that like vibe to it. But you can go anywhere, bro. Costa Rica, El Salvador.
Yeah, we'll see. We still have some months here. Everything is
Like
sold
tropical.
already. So we'll see.
Yeah, all the other crypto people end up in Dubai because they've got decent capital gains rules. It's insane that just moving to another country, you can increase your ROI by 1 to 2x sometimes. taking
then
out these
again,
highs.
I'm just have enough to go to Dubai and start my life there, but I would. It's a minimum of 1 million in your bank account, if I'm not wrong.
To get your
Um,
citizenship, yeah.
That's the top. Have to
yeah,
sell.
that's crazy.
A lot of people from Dubai have moved to Miami recently with the war and all that shit going on. They're calling it Dubai with no rules, which is probably pretty accurate. I think Dubai is still a more beautiful city, though.
Oh,
Think
man.
you. Oh, sorry.
Go ahead. Go ahead.
I think you'll get quite easily depressed in Dubai, even you're out with the gainers, if you know what I mean. If you come in with 1 million and you just want to live your life and don't want to gain millions, I think you're depressed of what you will see passing by every day.
Oh my God, that
People-
million is gonna feel like $10.
Yeah, yeah.
I was gonna say, Kevin, I'm kind of in the same position as you. I'm getting my money ready pretty much right now. They're gonna be giving it to me, and I'm gonna spot buy some Bitcoin.
I honestly don't want to do it because if I do that, I know if I take a position in Bitcoin with like let me say 200K, it's a chunk of my account balance that is gone that I have to stay in with it. It's not a spot. It's not a leverage trade, if you know what I mean. So it's
Yeah,
for
yeah.
3 months, and I'm not that good with that. I like to have all my money and flowing, and honestly, every month everything needs to come back in, have a full checkup, and goes out again, something like that. Oh, sorry, but that's a nice candle.
Oh yeah. There's a percentage that's right? There's a percentage that I think is right for everybody as far as what amount of your net worth. And that's not just for Bitcoin, that's for like any asset, right? I'm not really comfortable. If I had to have 100% of my money in any asset, it would be Bitcoin. But I never do, right? Like I never put all my eggs in one basket. I might be as high as 90% sometimes though. 85%.
It's close.
Yeah, that's pretty close.
I think a
Yeah,
quarter. Like I
I'm
said,
there with you.
The thing is, I don't really look at holding Bitcoin as a position. Like I denominate my wealth in Bitcoin. So like during the bear market, the reason 90% is in there is because, well, that's what holds, that for the majority of time, that's where my money sits. Right? It sits in Bitcoin. But I don't necessarily consider it a Bitcoin trade. Like my Bitcoin that's sitting in cold storage that sits and just doesn't move. Like this is basically my bank account. It just has to be converted. Only time I'm really in cash or cash equivalents to a significant degree is during the bear market.
yeah, for me it's different. I buy cars, and the cars is my stock. It's my bank, if you know what I mean.
Mm-hmm.
And they don't depreciate because I know what I buy. But yeah, yeah. So can we see this as stage two of the rip up, and then there will be a small third rip, and then break down? Because it's wave two, from my opinion, at this moment happening.
It
This candle.
depends. Some people, if you're talking Elliott, some people are saying it's a wave 3 of 3. And some people saying it's a wave 2 of 3. I don't know. I think we're just running off an extension, like I said. It's time for UK to put their money in. Asia already had their turn. US had their turn earlier. Like I said, we just have to have this flow through the sessions.
How's dominance on this?
All right. Were you in that dom? Remember we were talking about that dom position? Were you in that dom position today or no?
Yeah, I closed it out the other day already. Though.
Oh, okay.
Wondering where it's at now. I guess I could go look.
You guys trying to convince yourselves, or are you trying to convince me? You do realize that there's absolutely nobody stopping you from being all in right now, right?
Well, I wouldn't go all in at this moment.
No, I'm talking to you too. Every time there's a green candle, they get so euphoric about being in a position that they start yapping.
Going all in now is like, take my money, just take it, come on.
Oh, if it takes all of those blues, let me see something real quick. Nice.
Did Susie came on already?
Nah, BJ said she heard, she talked to Zusi the other day, but I wasn't here. I think she said she talked to him on DMs.
It's too late for this.
Hello, lady.
My alarm went off.
Look at the tape. The tape is insane right now. You got all these whales, and this one guy snuck in and bought 0.6 Bitcoin. Get out of here, bro. You see we're trying to do something right now? I think it was closer to 3 on the aggregate, Sinlos. Excuse me. It was very close to 3 bill.
So you met, but you're in the USA and you're playing 400x leverage. Do you play perps with the VPN or what are you doing?
No, I don't even need it.
In your state, it's still legal, or am I wrong?
They don't care. I don't put a lot of money there though. Less than 1,000.
Yeah, but that even doesn't work at my place. So you do it.
I would never put a lot of money there.
Okay.
I will only go to Coinbase and do spot.
What's the platform called you're playing on?
What I got weeks, but I wouldn't put I don't put a lot of money there. When I get my big amount of money here in a little bit, I'm going to be on Coinbase.
Are you gonna bypass the fee?
I'm just going to buy spot and hold. hopefully if we get
Yeah, but you
the
know how
number.
Coinbase charges you that fee? Are you gonna join their subscription or whatever so you don't have to pay that?
Nah, I'm just gonna buy it down there, hopefully as low as I can, and I'm just gonna hold it. I'm not even gonna trade it.
Dbloc, do you pay a lot in fees when you buy spot?
I mean, over time, yeah. Excuse me. W 17 months. What's going on, Bucks? Over time, yeah. Like when I look at when it comes like tax time, look at that number. It's pretty ugly. But
If I want $500 worth of something, they charge me $20.
on what?
Just like on whatever.
Are you're like on the regular accounts, right? You're not on like if you're Coinbase, you're not using Coinbase Pro or Robinhood Gold or Kraken
Just
Pro.
regular.
Yeah, you need
Well,
to
you know
get
what I
out of there
could
because
do?
they're killing you with fees.
Oh, really?
Yeah,
Where else do I go?
you just need to go to the top level of you know how they offer gold or pro or well, that comes with reduced fees.
And it's worth it.
I mean,
You
if
don't
you
have
trade a
advanced.
lot, it's worth it. Yeah, you just got to do the math to see how much money you plan on putting in versus what it's costing you.
You got to use advanced. You can't use that regular version.
Yeah.
They still charge you. I do use advanced. What do you mean? There's still a fee.
Well, it'd be a lot
Yeah,
worse if you were on regular then. Yeah, it's not free. It's not feeless. I'd be shocked if that played out on Soul, but I'm here for it. I could use one more good hit on Soul before I compound. But ETH is the real star. I'm hesitating my exit on ETH just because I want to see how we react to this high volume round. So far, it was pretty clean.
ETH did what? Like 19% yesterday. That's crazy.
Yeah. Yeah. It was cold up so tight, bro. That shit looked good. Just last week, we were looking at it against all its pairs. Looked really good against everything except for like maybe TRX. Because that you popped up, rejected off that high volume node, came back, held the base, and then went for it. XLM is probably my least impressive or my least sort of enjoyable trade of the day, but it's not to where I think it can get to. I just don't think it can get there without building structure. That's the only issue.
All right, hype, get it down there.
Do I need to make like Tom Lee was right hoodies?
I didn't even know Bitcoin's at 71. Jeez, that was quick.
Yeah, we took like 7K, 7K. Just
Okay,
telling
yeah,
you.
hype's got heavy resistance at 72.
Yeah, Circle's doing good too.
I need hype to recover some of that giant green vector.
What'd you say, hype?
Yeah, I needed to recover some of that move up.
These guys must be feeling like they're on an island all alone. They're on an island all alone. I think we run until the liquidations run out.
Squeeze.
Mm-hmm. Exactly.
That's cool.
That's all right. Somebody's
like
gonna
they're
pay
all
for the
about
sins
it.
of the father.
Let me take a nice short position.
I knew it. Not. I don't think that's a bad spot.
It's really nice volume, man. Let me see something. That depends on who you ask, mister. If you're asking me, no. Nice volume, right?
Damn.
Hold on. Is this? We need an older BTC chart. Bear market. Bottom of the bear market, right? Look at 2022. Can I get a Bitcoin? I mean, can I get a chart from an exchange that actually has volume? Is that possible? What is this? Bitcoin US or some shit? Hold on. Oh, it's USD, no wonder. BTC US
It's a nice weekly candle.
DT. Features. Yo, am I tripping? Why can I not find this chart? Looking for regular ass Bitcoin USDT on Binance. There. Okay. Yeah. It was so difficult to find, but You see what the volume looks like when you come into the bottom of your bear market? Like the difference between bear market volume, bottom of the bear market volume. And then it goes flat again. This move up, this entire
Just
consolidation has been on declining volume.
just a small pop.
I wouldn't think it's anything to get excited about. You guys are going to have a heart attack if you're getting excited about this for what's coming during the bull market. Where the hell is my chart now? All right. Coming up to our last spider line too. Now where's my other chart? Oh, there it is. Okay. Wondering where you went. Oh. Taking a nice chunk of that vector so far. That vector's on the daily, I believe. Yeah. Let me fix these for tomorrow. Looks like Apple's going after its gap. Actually, looks like everything is sort of going after their gaps. What's going on, Subo? We're good, brother. Let's get you.
BTC USDT.P. When I told you guys months ago to make sure that your conviction was sound and that your conviction was based off of your research, because the closer we get to the bottom, the harder it's going to be to deal with, right? This is why. If you don't have full conviction in your position, you will be forced to make changes. Right? And there's nothing wrong with that. I've been saying for weeks, nobody's going to complain about whether they bought at, 57 or 47. When we get to the tops, anybody around you will look at you like you're dumb if you're even comparing the two. That's like when we used to talk about whether you caught 15 or you caught 19 at the bottom of the bear. So don't feel like it's the end of the world, even if you get convinced that it's the bottom. Just make sure that you believe in your trade. That's the most important thing. Me, I'm very calm. I'm literally going on vacation on Friday. Now, ask me if I would have made the reservations if this has happened. If this had happened before. Maybe not. Just because, obviously you want to be around to watch, but I personally am not tripping on it. Yeah, I try to lie to myself and say I'm not going to be watching the chart, but I think we all know that's bullshit. I'm only going to be gone a week. I'll be back by next Friday. Tomorrow's a test, y'all. You're not getting rid of me that quick. Some of you wish I would just go on vacation tonight so you don't got to take the test tomorrow. Test is ready. I took it. I got three wrong. To be fair, I didn't read it correctly. Right? I was like, click, 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 thinking I had this shit on lock, right? This is easy. My shit. I'm going to get 100% on this. But the score came out at the end and said 3 wrong. I said, huh? But it's cool. The way it's set up, when you get anything wrong, you'll be able to click on it and it'll take you right to the course, right? It'll take you right to the couple paragraphs where the answer is.
You guys remember from the course, this is where the highest amount of margin lives. Right? 100x's are the highest liquidation, but 25x's hold the most amount of margin. So much aggression on the tape. Let's go look at USDT for a second. This is the big one that we were looking at earlier. Holding this uptrend. Right. Bear market for the most part lives on this side of the uptrend. Our relief rallies that we've had have been here. Relief rally, relief rally. Right. Top of the market, relief rally, relief rally. Oh, well, there's an easier way to do this. I'm stupid. Let me flip the chart real quick. You see it? Right. Our relief rally tops have come to touch that uptrend. Where we are now. If you look during the last bull, write this down. Right? It was the same sort of deal. So when you flip it back over, oh, that's wrong. And you want to watch USDT, BTC, then what you're looking for is for that trend to hold. In my opinion, the reason you want that trend to hold is because we're not ready for bull market. This is what a bull market looks like on USDT. Sorry, hold on. This is what a bull market looks like. Right? Bottom of the bull market, bottom of the bull market, COVID, right? There's plenty of room for USDT or for Bitcoin to run against USDT, right? Because you have these big drops. Where you plan on going? This isn't like a regular coin where price can just do this, for example. And then we have a bull market that brings us all the way down there. Oh, my bad. It's because I don't have it shrunken up. There you go. Right. So if you take the assumption, and right now we're talking about isn't how we bottom. Right now what we're talking about is the health of the bull market that you can expect ahead of you. Right. So that's basically the floor for USDT done. I mean USDT divided by Bitcoin. How's the support? Okay. Right, then, all right, I'm with it. Cool. All right. Let's just pump from here. Great. Right. But where do you want to go? Where do you expect price to go against the dollar? Which for the most part is what we're all buying it in, right? Do we hit bottom here? You see where USDT versus Bitcoin was? And then that drop down, right? Is what gives you, and then COVID was crazy, right? But then that move, right? That big move down is what makes Bitcoin increase in value just against the dollar. We're not talking about adoption. We're just talking about the dollar getting weaker and Bitcoin becoming more valuable because the dollar is weakening just off of the weakening of the dollar. So I don't know about you, but if I had my choice, which nobody does, right? This plays out the way it plays out. But if I had my choice, then I would want to make that move down to be able to make that move up. If you notice the last move down, this move down during the bear market is the last move down, right? This move down here during the bear market is the last move down. Right? That's what sends it. Here, sends it. This move down here for COVID, right? Sends it. So it's not like a lot has to happen. But that's just if you want it to be perfect. You know, sometimes life isn't perfect. Nice. That's all it's about, bro. Adding tools that give you more confidence, give you more confluence. All right, let me figure out how we're gonna set this up for overnight. Do a little last TA, drop a little squiggle. And get the target from over here, though. Not if I can help it. So that vector range ends at 73.4. $72.7 is the top of that. Yeah, hundreds right above. Right, downtrend, so we can watch that. Corner controls underneath us. I'm just doing all of this on this chart because it's going to be easier to see. Well, we could blame Trump for this one, but it is his Treasury Department. I guess there's something to that.
Am I the only one, if I hear Trump speaking, that he's so full of himself? I did this. I achieved that. Thanks to
Whatever
me.
gave you that idea?
I made our country rich again. And in every sentence he says something like I did it and that, and the prince of that country told me that I'm doing well, and I achieved this, and that president told me I'm doing well. Every time.
Nah, when they asked him about when he's talking about North Korea, and he said, "Well, you know, he's always treated me very kindly." I was like, "Wow." It's like, you ever have a problem with somebody? Like somebody does something really, really screwed up to you, and then one of your friends just hangs out with him. He's like, "Well, I mean, he's never done anything to me." Like, damn, all right, cool. Appreciate that.
And then comes
Yo, D,
China.
you got a minute?
Yeah, what's up?
Brother, you most likely went over it a few times, but I can never catch up because of the the schedule difference. Does this, out of the bull flag or bear flag, how do you call this? End the possibility that we're gonna dump or not dump, but hit our cases down below?
Nah, not with the amount of liquidations and stuff we have down there. This is an impulsive move. We've just got to wait for the sweep to stop, in my opinion. Even if you were in the camp that the bottom was in, you would still be coming down to 6-3, grab vectors, come back to this main. Because the one thing I want y'all to understand is that the bottom not before the bottom and after isn't immediate. There's one day that's the bottom of the market. There's one pico bottom, right? But when we hit that bottom, we're for most likely still going to be sitting flat in that same range within about $10,000 from that bottom for months and months and months.
Oh, I got that one. I understood that one.
Yeah.
It's just and then one more follow-up question. I'll leave you alone. I see on the chart that you're showing right now, you got that vector gap, and then you have the measure move as well. Are we supposed to hit the vector gap and the measure move, or the 800 EMA on top of that, or all three possibility, or no?
All three are possible. The more probable for me was the 200 EMA was really what I was looking for on the daily. So seeing how we wrap up around here, and then right here is the top of this range. The top of this entire thing is sitting right at 72.7.
Yeah. I'm following.
So if we're just going to look at it as range trading and pretend we're looking at a 5-minute chart or something, then you would expect between there. I wouldn't be surprised if it didn't play out. I mean, this is the third time that we've sort of run this exact structure. You know? So, and we haven't played out completely on all of them. And I'm being generous with this, or I'm being liberal with this flag, right? If I wanted to just put it up to range,
Oh,
we're not
yeah,
really even there yet. So I'm just watching this one for now because it's the closest. But you still have that. And it could be exactly the same thing. Come up to the 200, fill that vector, maybe chop around, maybe the 800 comes down. The only question that is really like what you have to ask, if you take everything out of your brain completely and just look at what happened today, right, and you understand why the money came in, your only job is to figure out, is that going to continue to come in tomorrow or not? Right? Is the money going to dry up? Because that demand has to not only stay, but it has to increase and then continue to increase and then continue to increase. And that's how bull markets, that's what a bull market is. I wish you guys would have been around for some of these. Because if you notice, a lot of people that have been here for a while, they don't get too excited about these sort of moves. And it's mostly because we're dead inside, but it's also because we remember bull markets where you had these type of relief rallies, like a 2x. And it was commonplace. Like it wasn't even rare to, some of these drops.
And yet we had fewer liquidations.
Liquidation shit today was nasty work, bro.
Yeah.
Like that shit was bad. This one was probably one of the most sadistic bear market rallies right here.
Well, they did fool us though.
This one was so nasty, bro. Think of this. Play through this for a second, right? You come down. You came down. You had a 2x relief rally. And then you develop this support level. I can remember this shit like it was yesterday. Right? Then you come back, put in a higher low. At this point, everybody was saying, bull market's over. That's the bottom. You need to use the right tool for the right job, brother. Right? Another 56%. Then you come back down the range, another 47%, like a 30% rally here. By the time you're here and you're coiling up, most people were already all in. That's it. This is the bottom of the market. Bitcoin will never go down underneath. you know, 6,100, whatever. And then the floor fell out. Right. So a lot of people didn't have money to buy this dip because they were already all in here for the most part. Maybe they sold at a loss and got to buy back or something, right? Then immediately from that point, you put in a low and a higher low. And that's where you have your true bottom. Right? Low, higher low, price takes off. Cool. Price comes up back above where you were to the top of the last relief rally, right? Dead cat bounce. You know there's supposed to be a reversal, secondary scare, right? For the most part, price comes back down to support, or at least to the range where everything else was. At this point, if you had any money left at all, you're all in. Price is going great, 62%, couple weeks of pump, no type of worries at all, and then so people love to have stories about how they had all this money to buy the dip with on COVID. Like COVID dropped and they just threw their entire life savings at it. Really? Then you weren't trading the bear market. Because 9 times out of 10, if you were trading the bear market, you were already pretty thin. Pretty thin and pretty hype. At this point, bear market's on. You're not even thinking that this is possible to this drop. Remember, this drop right here is no bullshit. Wasn't like a small retracement. Like that shit went down 57% into support. You know what I mean? And then even during our last bear market, right, 50%, was it 40%? And some decent little rallies. This one in comparison is kind of sucked. This is why I said that this has been a rough bear market. I think this was 20%. This was also maybe like 25%. But there hasn't been tons of, and that's why I think bulls are so aggro. Because there really hasn't been tons of opportunity for them to make money on the way up. And right now we're sitting at 20%. So while it's cool and all, right, and it's nice to see number go up, right? Some of the early alts that I bought are enjoying it. The Bitcoin position I was holding is enjoying it. You have to excuse me if I don't start doing backflips or changing my entire thesis because we're 20% off the lows. I'm personally gonna need to see more than that, you know. But again, y'all don't have to wait for me. Feel free.
Thanks, D.
No problem, brother.
By the way, those W's that were fractaling out, they were decreasing in magnitude, I think, right?
Yeah, I bet. We look at
Well, the middle one, I guess.
some of them had some decent. I mean, you would have got some decent moves had they played out. You know, like this would have been a 45. This would have been a 50% move, 53% move had it played out completely. This would have been a 35% move. If this plays out completely, then it's from the lows. Would be a 30% move. It's just a matter of putting things into perspective, I think. What I am kind of upset about is if if the volatility continues for a week, and there's a good chance I'm gonna miss out on some good scalps. But I'm gonna send Market Maker a message. Tell him, hey, like, you know, when we're in class and you hold the price and you don't let it do anything, you do that for like a week.
Brother, you woke up later than usual yesterday.
Yesterday or today?
On the whole, well, yeah. In your case, it's today. But
No,
for me, usually you were like,
I was at the passport office at like 9 o'clock in the morning and trying to get my shit together.
oh
When
yeah, you weren't sleeping. Yeah.
when the pump happened, I was in line.
When the pump happened, I was shorting, and I didn't look at the charts for 2 hours during the pump.
Mhm.
Imagine my surprise.
Yeah.
Brother, that happened in a span of 15 minutes. The first pump up. Like,
Yeah, Nissan, we were talking about the Bollinger Band squeezing. Very clear about that you don't get a direction. We also said that these things tend to pop up before they drop down. We did the math on what the percentages would be. We can look at it again.
Oh,
It's right.
our
No,
premium
it's
community
not
was
here.
perfectly positioned.
Yeah, it's gonna. Didn't catch the pump. Join the insiders group. These commercials are hilarious, bro.
Bro, one thing I was just gonna say real quick. I saw a post from, I'm not gonna name him, it's a well-known hit caller on X, but he literally posted like 2 million profit on ETH long, saying, okay, I might just retire after this. And immediately below this post, he had the link to
Man.
use Telegram Premium for $200.
That's
That was hilarious.
funny. So our last time that we squeezed on the Bollinger Bands was right there, right? And then we looked at it and we said, okay, price went down decent amount, 30%. But before it went down, it went up 6%, 7%, let's call it. Same thing happened here. Bollinger Band squeezed. If I'm not mistaken, we were right around here. Right. Price ended up going up before it went down. I might be off by a couple percent here because this was supposed to be 10%, so this is lower, I think. Something like that. Whatever, it was 10%. There was a 6%, there was a 10%. And then our Bollinger Bands is squeezed here. And so far from that point, we've gone up about 10%. The problem is what happened after. %39%, 35%. If you shave it off and assume a 30% drop at some point, wherever we top out at, Brings you somewhere to 49, 48, 50, depending on where we top. So that's what I was talking about when we were talking about the Bollinger Band squeezing. Right? In bear markets, price goes up before it goes down. In bull markets was the opposite. In bull markets, our Bollinger Band squeezed right here. And right here. And in both of those scenarios, it just went down without going up first. And then I think somewhere around here, I can't remember exactly. There was one, and the only one really, but there was one at the bottom where the Bollinger Bands came in here. Price just ripped. Right. That's the only one where it didn't go down. Can I press that? So that's what we were looking at. So for my squiggle, before I go to bed, drop our neckline. Just pull this over. That's our W invalidation there. Let me get rid of this. Oh, do I already have it drawn? It's already there. So we're probably around the place where we should start looking for it to refractal. Didn't quite hit that measured move yet. Bro, how about you? How about you stick around for more than 5 minutes before you start assuming what we've talked about and what we haven't talked about? We literally just finished doing a complete breakdown on USDT versus Bitcoin. Like, literally. Not always, but I mean, I try to cover the same stuff over and over and over because of it, because I know people can't be here all the time. Let me get rid of some of these old levels. UK already held. This is old. This is our playing field for the next couple days. Get rid of the ghost. It's going to come down to a couple things. First of all, it's going to come down to the bears. If the bears keep actively shorting this thing like they've lost their mind, it's going to continue to squeeze. After we run out of liquidations, the only thing that keeps price moving is if demand increases. Your job is to decide whether this was sideline money coming in for a long-term play, or whether if this was catalyst-driven money that came in and created a short squeeze. Everybody's got to make that decision for themselves. But they mean two very different things. Hold on, give me a second. These are old. These were targets from the way down. Actually, we could probably just get rid of them. These are all very old levels. I should have probably recorded my opinion of today so that I wouldn't have to repeat it 30 times. It's been like that all day, Mr. Only. You've had waves of whales coming in, buying and selling. I mean, waves. Like when I say when it's one, there's many. We were looking at some of the stats today. Bitcoin whale wallets, mega whale wallets above 10%. I mean, above 10K. Got to a 60-month all-time high 10 minutes before the Treasury announced that they were buying back bonds. Smells a little fishy. Yeah, there's been those rumors all day that messages went out on Truth Social to whales to buy Bitcoin before the announcement came out. Or I can't confirm or deny it. What I can confirm is that those wallets did, did go active and increase positions 10 minutes before the news came out. And I think they said a third of the wallets were brand new wallets. Just to give you an idea, there's only 89 mega whale wallets. This isn't a large group of people we're talking about. So a mega whale Discord with 20 people that get the message before anybody else. Good money to be made there.
Can we create a crypto native meme like same as 6-7 but 8-9?
That shit died so hard.
What do you mean died? Is it
Like
over?
that whole meme died so hard. Like literally from one day to another. Like one day I'm watching multiple kids in the store freak out because there's a 6-7 on a price tag. And then the day after, just crickets, like if it never existed.
I feel like it's been going for a while. Like
It
few
had no,
years.
it definitely went longer than it should have. That's for sure. Whenever your parents start saying
learning
shit,
numbers.
whenever your parents start saying shit, it's over. You know?
Oh boy. Is that the same as like whenever the taxi driver is looking to buy Bitcoin, you know, the top of them?
Basically, yeah. And whenever your neighbor says, "Hey, Bitcoin's doing really good," whenever your Uber driver tells you he's quitting to day trade for a living, it's time to take some profit. Morning, Firefly. This is wave 2. If we're talking about this specific count. W. Sorry. W. Rise 1, retrace. Rise 2. So you're on your 3. Star Child with the 17 months. Don't do it, bro. Your mom was right. Mom was right the whole time. It's all a scam. Yeah. That's probably pretty toppy for the stock market. My mom asked me not too long ago if I had any NVIDIA. I was like, oh, top signal. 16 months. You guys are getting old, man.
I think in reality it's 4 months only, but since it's crypto,
That's
it's
what
multiplied.
it feels like, yeah. The fact. Until you look back on it, though, right? Like, when you look back on, I mean, like, it feels like 10/10 was 2 months ago. But the last week felt like 4 months long.
Curious now. So you mentioned like obviously if there's enough buying pressure, it'll keep going. Then you mentioned the 8-9 wallets, whatever
Mhm.
whales. if that was the case and the whales bought, but they would still be like anticipating like a prolonged rally, or if they're still anticipating that final drop, doesn't
That
that
type
mean
of
that they will
money,
need to take profit though?
that type of money likes to move to make money. You know, it doesn't really like to move around for no reason. But I mean, substantial money was made. I'm following the wallets that increased. I've already got them all tracked and followed. So when I wake up in the morning, we'll see if there was any movement there. But I would
I'm just
imagine that yeah, they intend to take profit at some point. And these aren't there's there's like long term holder wallets, right? That's not what we're talking about. We're just talking about wallets that are above 10K. They're not necessarily wallets that only move at the
10K
bottoms or only
BTC, you
move
mean,
at the
right?
tops. Yeah, 10,000 Bitcoin or more.
$10,000, and all of a sudden I'm a whale.
You're a whale. You're a whale. Everybody's a whale. That's how it was during. Anybody remember the glitch on Coin Market Cap that screwed up everybody's exchange profit and loss? Everybody had like billions of dollars. It was like
Oh
it
yeah.
was like, yeah, it was like 5 years ago now. There was a glitch on Coin Market Cap. When you looked at your profit and loss on your exchange, because they get at the time, I don't think they do it anymore, but at the time they were getting their prices from basically the same source, the same API.
Same dealer.
Yeah. And people just looked at their exchange and had $1 billion, $2 billion, $1 trillion. People quit that day. Like just walked out of their job. F you, you're cool. F you, I'm out.
Hey boss, so about that thing yesterday.
So like I mixed my medication in the morning. I yeah, sorry about that. I don't know what the hell I was talking about. It wasn't, I mean, I think 10, 15 minutes is about all it lasted. If you had any common sense, you knew it was bullshit. Like, obviously. But some people, bro, they just believe everything they see. If it says that's what I have.
My dad is like that lately. So like all the, oh my god, I just found a piece of software that like boosts your computer speed. I'm like, what do you mean? It's like, yeah, you said that on the website. I'm like, Jesus Christ. Please don't download anything.
They wouldn't say it if it's not true, right? There's laws against that type of stuff.
Oh yeah.
Gotta be up early tomorrow. I got a couple more things I gotta do before I leave. And then I got class. And it's 5:30 in the morning. I'm sitting here with you lunatics. I'm going to bed. I'll talk to y'all in the morning. Let me set this up.
Sleep tight.
Take it easy, y'all. Stay safe. Let me drop these targets from this page. Though. Hold on. All right, so that's the daily vector. I want 409. And that's your daily bull flag measured move. Remember that we haven't gotten one of these daily bull flag measured moves to play out. Just there so you know where it is. All right, family. I'll be back in a minute. Trade safe.
everybody. We're coming up on this kind of a important line of resistance here on the 69-minute. If you look at the chart, we're right at the top of its range, and like 71,908 is a break line, and we're at 71,901, and then over that ridge is 72,588 on the top edge, and on the bottom edge is like 72,2. So if we can make this push between 72,2 and 72,588, the next big hurdle would be 72,993. And then I have a target over that ledge between 73.1 and 75.7. And that would be on that angular ascension. I'm sorry, I gotta go fix my voice, take a lozenge or something, and I'll be back. But yeah, we're making an effort here to cross this line between 71,80 or 71,998 and 72.5 would be that ridge. If we go on a vertical, it's likely to tap up there at 72. Let's see, 73.68. So of course it's 73.69, right? Anyway, I hope you're all having a wonderful morning, and I'll be here.
Thank you, BJ.
Before I go, remember our discussion about the 3-day. And so at the moment we are seeing that stacking that I was talking about. And I'll discuss that when I get back.
Thanks, BJ.
All right, good morning again. So we are at this pivotal spot right here. So I would like to see on this exchange 71,908 or better during this. Sorry. Or better at this pivotal spot between the 3-minute and the 24-minute here. If we can extend this little path up above 71,908 to 72,416, then that opens the gate back up to 72,5 to 72,9 again. Now, on the flip side, if we dip down below 71,766 here, there is a path that opens up to that 71.5 level. And then if we get extended pressure, the downside is to come back below 70,005. So this is an important little stint we have. The gate is like right above us. If we just kind of travel up above 71.5 to 71.9 for a couple hours, that would be okay, as long as, like I said, that line of 71,908 is kind of the barometer between the upper levels building structure and not for a while. All right, we do have, let's see. I'll give you this number right here. So 71. $450.4 is the cross line on a little this little triangle down here. If we lose the 3-minute structure, that would be the break line there. Put a little tag there so you can see it, but that we have to negotiate this little triangle that you see right here in order to make this this jump up above 72. Actually, it can come down to about 71,281. Let's see, 71,281. All right, there. All right, so the bottom of this would be 71,766 on the 3-minute time frame. If we break that, then look for the lower numbers down towards 71.2. But so far we are up above 71,908. That this number here is crucial. Let me put that right there. 72,526. 72,526 is would be the bottom of that extension there. If we're gonna, so the wicks can come down to about here and right here. Sorry, I'm just talking out loud. Right there. Right up here is 74, 73,886, 86, and then right here is 74,030. And then way up above is our gate of 75 up here in the top corner. You can see that. So that is following on this rising path there. This is the extension gate that you see between these two vertical lines here on the small time frames. And then this ascending resistance line is like the bull path. So you have to look for this point right up here at 73,886 over to this bar on the vertical here. And you see where that meets that black ascending line. That's that line is just below this 3-minute structure right here. So that's why this structure needs to cruise up above and stay up above this number 71,908. Otherwise, it'll dig down and then oscillate right through here. So that's why I said, you know, we might get a second chance at 73, coming down from underneath here and back up. However, the most bullish path is through this gate here. All right, let me show you it on a higher time frame. You see, here's our bottom border of that ascending angular, right? And that's above the 24-minute 382. So that blue line I was just giving you the coordinates of, that is the ascending break line between the 236 and the point and the 0 on the ascending path. You see these white lines here. See how they ascend up through these rails from that bottom, from our push off point, my circle down here. So now we've climbed up this way on this ladder, and now we're in this midsection trying to build new structure above 71,908, and that leads us this way. But we can have this drift, right? We can drift from this point on the vertical and drift back down hitting that point and then hitting this point right here at about 70,001, and then you're going towards that 786 where you lose that whole move, or nearly anyway. But then we were still ascending. It's not like you're losing bullishness. It's just on the small time frames, this would be the fastest and most bullish route to get to 75 and above. So let's look at our 69-minute time frame. You can see now we are over our spiral curve, our headband. So we did pass that area that I was talking about so heavily, above 69.5, right? And now we're take your eye and just kind of curve your up like this, and that brings you back up over here. If these candles can manage to build themselves up over this white border and the yellow. The yellow is the bottom of the most bullish run. Okay, and now we're trying to pass through this area above that headband that you see, the spiral curve. We're trying to pass through that up above this border of the white. So from the bottom side to the top side. So you notice that is at 72,495 to 72,536. And then if you keep ascending, then you meet that angular from underneath lower than the 50% mark. So there is pressure moving up this way. Okay, so we're just on that border. I'm gonna go now to a 4-hour, and now you can see the same thing here, the 4-hour candle. I don't want to move this right now. I just want to show you that this right here is like the gate up to that passageway. So this candle is the most vertical right now, and so it needs to fill up and then not back down on when it opens at 8 o'clock. We don't want it back down below 71.5, because then we might be seeing that drift towards 70,005 and then come under this line right here. And so this is the marker on that 70,323, right? So if you square that out, this is the corner, and that is on Friday, October 2nd or October 3rd. So remember when I was talking about October 3rd yesterday and the 4th, that right here between 70,003 and that date is our corner. We can get into that a little bit later, but remember I was telling you about this is the fan that I drew, this white line, and that leads us up to that bar. That bar, the underside of that bar is 73, like 420. Of course it is. And of course, then we go here. If we continue on this path and start building the candles up here, we can see that 70,000 or 75,000. But then we've got this area of contention. So coming up from underneath at this point, this is our break point on this move. See on the angular side of that circle, that's between 69,497 and 68.7. And so those are the numbers we talked about yesterday, that 68.7 is kind of like the lower gate. All right, we'll go back and then now, so we did dip under that number just slightly. Remember, it's 71,908. There we go, we're back again. So that's why I say we're gonna, kind of bounce up and down. So I'm on 69 minutes, so you can see where if you go sideways and then up, catch that angular, and then that point right there, that pivot is at 73,886 that we talked about a few minutes ago. All right, here we had 72. So we're just on the underside of that forward moving angle that's descending for the 24 minutes. So if we can cross then that angular here on the 3 minute, then there's a good chance that that we're going to pass 72,588, which is the gate on the horizontal. We are building up some liquidity up above us, and that liquidity is up. It still exists up above this gateway of 74,199 up to 74,836. But we, see the movement here is not like strong straight up. So unless we kind of turn this corner and then get a bullish move on this path right here between these two lines, it's likely that we're gonna kind of bounce up and down around through here and not go straight up here. But we could see that. Let's see on the 24. There's still a lot of strength on the 24 minute. Okay, again, we got to watch though, because this is the point at which we either move up here and pass through this gate, or we roll back down. So this is where you need to pay attention to your management. All right, so it is possible now to drop down to about the 71.5 area. So please watch your stuff. We can also, recover this quickly. So this is just a decision area here. All right, we got some buying activity there. We have a little bit more to go to return over that path direction wise. The buyers are taking control right here on the 3 minute or the 1 minute, sorry. And we did cross over the top line. And we are looking back just a little bit. Let's see if we can hold that 71.9, 60 or above. I mean 72.60. What am I saying? I'm sorry. When I switch back and forth from the different exchanges, the numbers are just a little bit different, so it kind of stumbles me a little bit. So sorry about that. All right, 72. We're still above 72.60 by a hair. We have to push through that descending angular right here. See how that top edge of that candle is almost there. It's through it now. We're still on the underside of the bar above us. To get across that, we would need 72.370 or better. All right, we just made we're above the point of control on the 3 minute time frame. And now we're looking for 72.3 to 72.6. if this candle is able, let's see how much time is left. My time. See how the wick is through that bar, but the body isn't yet. So we might need 2 more candles. Let's see, 1, 2, 3, 4. 1, 2, 3, like 3 more candles. And then we might see that 72.5. Okay, so to review, we would want to hold 72,060 to and then pop up over 72,370 in order to bridge this little gap here. This also will become, if we do pop that 72.5 to 72.6 area, this also becomes a prime location for a rollback. And then how deep that rollback is up to the market. But it's possible to climb up here and then go sideways for a little bit and then kind of do a fall down the hill a little bit. So this is a transition location in the chart. still pushing, and we did get to the bottom of the base of this resistance bar, and the body of the candle is through that bottom. So let's see where the next one, 2 or 3 open up. If we can open up above this bar, and that's a lot more promising. We still have a little bit of time where we can kind of lose this have maybe another run at that that line. And again, be mindful that there might be a reaction up there and pushing us back underneath 71.1 to 70. I mean 72.1 to 72,000 and $45. Remember, and then around this side of the pole, again, that important number is 71,908. And then that would be the ticker for a move back down underneath this structure of 71.7. So then 71.7 takes us down to this bar here at 71,519. So we're at a very important decision here. So let's see what happens. I'm gonna go make some breakfast. I hope y'all have a successful trade and exciting day. I'll be back. Okay, so we're at that important gate again here. I remember the other day when I was talking about the triangle of doom. Here you can see that triangle right here. So unless we move back up above this red bar and over that yellow bar, which is in the white right there, the structure is not going to build above. We can get stuck under here and roll back underneath this 71.6 level, or we can move up and ascend, or we can do a zigzag. So this is the chop area that's difficult to trade. So if you're already in a trade, there's really no reason to let it go unless you're in a high leverage trade or you don't have time to watch. It's up to you. But there's up here is the ascending triangle that ends on that angular, and then this is the middle. See this black line going through? That makes that pennant shape up there. So we have to jump up here, build, and then break up above in order to build towards that 75 level. If we keep getting stuck on this 24-minute bar here, then we can just roll back down and then come up from a lower level about the 50% mark here. You see at the top of that channel structure, right? That's this midline here. And so this point that you see, that little marker, that is above this yellow arrow. Notice where those two make a break or have a gap. It's from this white line here, and then it ends here. So this is where you begin to see the pattern. If it keeps rolling backward or forward, this is the falling forward principle for me. And that lands here at the next one, which is about 70,004. Back to, if we fall through this way, then you have to look at that 70,323 now line, which is this maroon one. So if I move the chart forward, you can see that that line here as we go through time. So going back up, you have to go counterclockwise back this way, right? And get back into this level. The candles need to build this way above these ascending lines. And this one right here is the telltale if we're going to be able to manage that structure or not. You see, because we're waiting for the flow to move up to meet it, right? Remember I was talking about, well, price can go up here and extend, but then you have to have your EMAs follow and build back up this way. So notice my cursor is going counterclockwise like a storm. You have to, it blows up here, then the rest of it has to follow in an ascending turbulent motion velocity, right? If we lose the momentum, it's like the air coming out of a balloon, right? How far is that exhale going to take, right? Before they say, oh, I can inhale again, and then you have a swing back up, or that balloon just goes totally flat and you fall under, and you have to take a little bit more time to inhale again. So that's the flow. And if you can begin to kind of start seeing how much time is left in that flow, you're make better decisions typically. So here we are at that 71,007, and this could take us now, if this exhale does not stop, underneath 71,596, which we're almost there. And then the next level is right here at about 71,269. And then we have these larger ascending bars that, will probably stay above for right now. Seems like we're slowing down this descent. But we're still not above that red line. That's the 24-minute structure line on the descent. See, from here to here, I'm on the 24-minute. So let me show you that in the candles. So remember when we were up here on the 3-minute and I said, well, we still have time to lose this. Well, that's what happened. See, we got those 2 wicks up there, but the body just didn't cross it. Tried to a couple of times, but we couldn't get over that right now. So that's in between, for this 24-minute time frame, that's in between the 236 and the 0 here. So now let's look to a higher, we'll go to our 69-minute. And so see, you can see here that candle is on this time bar right here. And so we want to let's see where that next candle opens. If it opens above this angular structure, above its previous close, right? Or I don't know if that's the open or close, but that 71,908 right now. Remember, I told you that was important. Look at how exact that was. That's math right there. That line is so important, that one. It's that little dotted line, but I marked it here with a 71,908. 71,908 is the difference. All right. With that, I'm going to go make that breakfast. I'll answer that when I get back, Sirach, okay? But it's just an area of decision making.
Hello?
Okay, good morning again. So we came through that little area. We traversed the whole thing. We're down there to that. Oh, sorry, England. Down to that 786, and even just a little bit below on that wick. And now we're up in this midsection. What I'm looking for is between now and noon that we continue the an ascending pattern that does not fall below that 71,908 line, because our 4-hour candle, I'll show you, is right here. So this is our current 4-hour candle. Notice how they stack, and then that 24-minute descending line goes right through those candles. And then down at the bottom on this pole, below 71.6, is this ascending triangle that you see like that. Angular takes us up here. So remember, I was talking about this black line that goes through this midsection. The 4-hour tends to be a beast when it comes to holding or making a decision, and it throws a lot of people off sometimes because they see this move, right? And then when it gets exhausted, it's possible for us to, between now and the close tonight, to fall back into this area that you see here between 71,908 and 71.5. And then this is that scarf. See, it's like a scarf pattern, and I call this kind of the triangle of doom, because if we roll over at this point, right, on this ledge, we might get a little higher high here, come up to about this 72.3, but unless we close early time frame candles between now and noon above this, there's a good chance that we fall off this ascending ledge that you see here below 71,908, and then test this area back down to this rise of this previous large candle that you see on that move up between 4 a.m. and 8 a.m. So now the decision is, okay, do I enter and play the rest of this candle? Do I hold? Those are decisions you have to make based on what, your chart, your trade, and so on. It's a risky area to enter for this reason that I'm telling you. It's also a kind of a reward if this candle plays out and then we get the next one at noon above this bar, right? And complete that ascension above 72.5, and then we're into the 73 range, between 73 and 74. So this is why I call this a decision-making zone. If you can see the chart now, you can visualize this triangle. That's why I call this a triangle of doom, because if buyers are exhausted here and sellers defend this area heavily, we can find ourselves hitting back down here at 70,006, and then there's another chance of a secondary rollover. What you see here. So this is ascending, And then would start a descending, more of a descending pattern that could result back here. I'm not saying that does. I'm just trying to show you what to look for. So we still continue to be pretty bullish, but this is an area of decision making, like I said. So it's up to the trader to determine whether or not they want to participate here or relax and wait or to start a new trade. That's all up to a trader. So one thing that, speaking of that I'd like to share is that for me, I became a better trader when I stopped looking at the numbers as a whole on the chart, and I started thinking about a trade in the distance traveled versus distance left, or what is my available progress, and how much risk do I have left in a trade after I've traveled a significant distance. So if I entered a trade yesterday or last night down around 69.3 or even lower, and I'm thinking to myself, okay, well, how much play is left? How much reward do I have left in that trade versus exiting and waiting for a new one, or leaving some to feel out whether or not the market's going to give that next leg up. So, and de-risk a little bit in this area. So those are all the decisions that you make based on the type of trading you're doing. The other thing is that if you're in spot, this is the time where, if you think and your chart says that, well, we're going to go back, forward now and travel up towards the 73 to 75 range and even 80, then you can sit there and kind of hold it, because you're giving up time where your capital is tied up, or you add a little more, whatever. But you're not getting the risk of a leverage play where you could lose your profit and then actually, lose and come under water and be forced liquidated. Those are the things that make a little bit of a difference between a spot trade and a leverage trade. So for me, I like to look at it as how much reward do I have left, and how much is my time worth? Because now for me, I exited my trade, and I'm waiting. The reason is not because I don't think that there's possibility for me or for the trade to go back up to over 72. The reason for me is because I have an appointment today. My life is not going to be able to watch the chart. So I would rather take my gains, hold on to them, and wait for the next thing, because I'm looking at it not as in, 73, 75, or 62 or whatever. I'm looking at it as distance traveled versus distance left. So once I made that as a trader, not as a charter, no, as a trader, that distinction, my trades became much better and much less stressful. So that's just a little bit of thoughts that I'd like to impart. And you can take that with what you want, but it's just my experience. Hi, Pueblito. So I see your comment. You said you would like to see a rejection from 74. Okay, so and your thinking on that is because you think that that would be a deeper pullback that's needed in order to go back up again, or do you think that that's the area that you believe that you can capitalize on a short? What's the thought process behind your comment? Great, that makes sense. So to start building a short from there, because it's a golden pocket and then range from 82 high to 57 low. Yes, you're right. 70 for me, 73.3 is the gate to 90 and above. And without 73.3 being accepted, and so like you say, 74, then the chance of traveling that distance again upwards is becomes less, because 73.3 is a huge spot. So let's take a look at that. Okay, so here I'm back on the 3-day, and remember I was discussing about how the 3-day needed to return to its mean, or its 50 MA, in order for us to build above that level. So when you see this now on a more compressed version, like here's price right here, and then up here we have the gate at 97.4, and we have 116.5, and then we have here, way up here, way up there, we have 238.50, right? And across that is this large black dotted dashed line. That that line is, let me get that, 174.3. So notice here how we have our main circle, and then we have this a half moon, right? That half moon is on the underside of where structure is now. So we when we look at it on a different time frame, that half moon goes up like this, and it looks like a curve or a bulge, okay? And then this circle encompasses it. Notice that we're on the right side of that circle, and but in the middle or above that bar there. So we are in a transition zone, like you say, and it is necessary in order to come back up through here to be on the upper side of this structure that you see, this geometric structure. We're not quite there yet. We have to get above, let me stretch this out now. We have to get above 73.3 in order to get to that level, and then make this underside of that circle. See, now there's that, what you saw is like a cup formation underneath. It looks more like a bulge right here, right? So if structure is lifted above here, and now we've made this turn, then that, see how that becomes a floor, and this is left underneath. And then right here, that's 62.8. So when I was talking about, I need to see structure rise above 62.8 and be accepted above that level for me to feel confident that we have continuation in an ascending pattern. Well, now because on a 3-day, we did achieve that, we got over that mark, we have to now prove that, and the next candles need to stack above in order for continuation above that that level and not return below this 3 o'clock point right here. So that is our 68.7, and then underneath that zone is 66.9 right here. And then we would return back underneath that zone if we're below 63.5 right here. So to see that yellow dashed line. So remember when it was either yesterday or the day before, early in the morning, I don't remember, when I said, I'm going to change the color of this from blue to yellow so that it has more contrast. Well, you can see now that price has driven itself up above that bar, that yellow, and now we have built a structure above this floor right here, this target floor. And so now we've also moved past the lower edge of a build right here. That lower edge, as you can see here, is just underneath 68.7. So when we were talking yesterday about a pullback, and I believe it was one of you that said, so if we lose 68.7, then we can see 68. And I said, yes, if we lose 68.7 at that point, yes, we would possibly retest. It is still in the cards to retest that area. You see, if we come out of here and don't get accepted above 72.5 and then 73.3, which you see right here at this headband, then that candle has ability for the next several candles to flow and wind back down towards 68.8, and then here at the top of that ridge, which is 66.9, and then there is that point underneath that triangle right there. That's like 63.4. See that? So we are not out of the woods, so to speak, but we are in an ascending pattern. So let's view this. Here's our bottom of the previous 3-day candle, and then the new one opened up here, and now we're negotiating this area. If this candle continues to extend, and then we open up the new one above this ridge, this shelf, it's possible then to either have a indecision candle where we take out shorts up here and then longs down here and have an indecision candle. It could be a big one, could go, green and then red and then dip down back below, or it could just stack up, and we can have 1, 2, 3, and up. Look at the liquidity bar waiting up here. That's between 75 and 82. So 82 for me is a huge win, because that is our previous grand point of control. So 82 to 85 is an extremely transitional area for me in the way I look at it. So that, see up here, here's that 97. So it is, it is still possible to go above 81. and 82 and 90 and 90, right up here. But it means that there has to be acceptance above 73.3. All right, so I hope that answers a little bit of questions. And it's also still possible to flow back down underneath 63.5. So 64.1. So remember this hill, the purple one? We got over that hill. Let me just put that right here. We made a nice move. Now we have to hold it, prove it, and we might travel up and down here. We might get stuck underneath 73. All of those things are still waiting to be determined. But chart-wise, it is very possible to achieve between 75 and 83. Okay, so further, remember I was discussing how it was imperative that we build above the 50 MA from the 3-day candle or the 3-day time frame. That's this orange line. And we have done that now successfully. We have to prove this. We can roll back under it. Now look up here. Here's the 200. So that takes its, see how it's a little more horizontal than right about here. It starts dipping down. And now it's inside this fib spiral. So the 200 is now within the reach of the top edge of that spiral. And it will continue to move in this kind of fashion, and it may come down to here, to this, at the top of this bar that you see. So this is like the headroom. And price is here in the center, trying to find support above that level. Now look at where that lands on the top of that fib circle there. It's right at the top of it. So we've exited from that, and instead of it facing us now, it's pulled back towards being let's see how it turns. So now you can see that we are in the upper portion, testing that path right there above that spiral, the inner circle of the spiral. And then if we can continue to push up this way, over and up, we can begin to look at tackling that gap area between the 50 MA and the 200 MA that's above. That becomes like he's talking about a source of rejection, because we may not have enough buyers to want to purchase in this zone. However, today we did see that there was the biggest inflow of interest for ETFs. I'm not sure if it's ever, but it's a very, very large inflow. So it is possible. And I mean, I don't like to be my integrity means a lot to me. So, but I've been on the side that we can achieve these numbers up here. Now, whether or not we achieve them and then we ride back down is another question. But for me, I think that this is possible, at least to tap at least 75. All right, I'll leave it there. Okay, so here we are at 71, close to that 71.2. We'll see if this is a liquidity probe or if we're going to. Okay, so here we are at 71. Close to that. I keep forgetting I had that phone on. I'm so sorry.
Good morning.
Good morning.
Broke out there a little bit this morning.
Yeah, we did a great job. How are you today?
Good. How you doing?
I'm great, thank you.
That channel since mid-June there we just broke out of. This
Yeah,
this is the top of the resistance in that channel at just over 71K. So
that's
if we
right.
come back down there, maybe we could bounce off of it. So that bull flag still has a target around what 74.4, 74.5.
Yeah, it sure does. My bar is like 75.7. If we break above 75.484, on the lower edge of that bar is 74.569. Of course it is. And then I do have an extension, up to 97, but I just was talking about that. The reason is because we've successfully, for me anyway, we've successfully now finally gotten over that 50 MA on the 3-day. So that candle, made its move, and now it's up to this midsection between the 4 and 8 hour. If the 4 and 8 hour can remain above this 70,003 level, and through the close of today, then that 3-day candle will not dip low enough for us to test that 68.7 area that we talked about yesterday again. So this is the kind of the decision zone for me about holding that 50 MA on that 3-day.
That makes sense. Did you say 97 extension?
Yep. After
Oh,
82, yeah,
oh yeah,
because
yeah. After the 82, because of the price action, the
yes,
82 is a price action in May, and the price action in January is the 97.
yeah, 82 is the big get. If because that's the that's the point of where the cross of the 3-day 50 and 200 occur, and it's
Yes.
the grand point of control.
Yep.
So yeah,
And there's a descending resistance from all-time high
yes,
right there,
yeah,
and then you got the price action from in May.
correct. May 19th is
Yep.
yeah,
Now because and
yeah,
now I have that because of the price action from January.
that too. It was
There's a
between
descending.
January and May. Yep.
Yeah, and because of that one from, if you look at the one in, and I'm talking on like a 12 hour chart or something, but if you look at the one from January,
Mm-hmm.
that was a support resistant line. It was almost,
It was.
there's like a almost like a larger head and shoulders, and it's the top of the left shoulder, but it's a descending shoulder. And then you see the right shoulder hit it. The right shoulder hit it in January, and the left shoulder hit it in January of 2025. It's almost exactly a year later. It tops out on the shoulders, played out that head and
Exactly.
shoulder at a slight descendant angle. So that angle, if we get up to it, if we get over that 82 though,
Yep.
it's gonna before we get to that 97. That angle is going to have some resistance there, right? So right now it's like around 89. But you're right. Between here and like 82, there is not much. I mean, the
No.
bulls just need to step it up. There's a gap there. There's nothing really
Yep.
stopping it from going up.
So this is the on if people are looking at my chart, you can see the descend right there. See the break between the green and the purple, right? This is the line that Mike was just talking about right here. So here's the price action. You see the dip. So we've now successfully come back up through because of, now I'm on the 3-day. The head band here, because we did not push through this point on that 3-day enough, we fell back into a lower channel here. And that ascending channel gets taken up again along this black line that you see right there. Now, all of those meet at this point. That's 82. 82,000. And underneath it is 81,957. Over the top of it is 82,269. Of course it is. And then here is the liquidity weighting. The liquidity band is right here on time. So that poll is the 29th of August. So that's why that first week of October or of September is important on that turn. So here's price right here. You see above 71.5. And then if we push on that angular forward and bust through that head, that resistance between here and 73.3, then we have a chance to pop out of that headband area to reach the 75 to 82, and then to get that extension back up. See, right over here is the 200 that right now is about 90,000. So, yep, we're in line.
I'm gonna mess with the Russells a little bit. So the Russells did a nice little finally took off. So man, if I remember back in history, once the Russells broke out and caught up to all-time highs with the rest, crypto was right behind it.
Ooh, thank you for that. I hadn't put that together before.
Can't remember how many years ago, 4, 5, or 6, or 8, or something like that. It goes back.
Let's see.
Like once the Dow and the Nasdaq and the SPY took off, once the Russells caught up and got to all-time highs, and crypto was like days after, if I remember right.
Yeah, was that 2023?
I think so.
Yes, because I see that same pattern. That's what I've been seeing for the longest time. I see the same pattern in crypto as I did in 2023.
And I was watching that when we first broke all-time highs, past one, but Russells didn't catch up. But this time Russells did. So being small caps and then crypto, I don't know. I don't know how it's going to play out with the ETFs this time. Big money being in.
Well, thank you for that information, because that's kind of like a puzzle piece, Sometimes if we have those little puzzle pieces in our pocket. So look at this big buying these market buys right up here. That's a big cluster of market buys above our price. And the delta on that is big. The open interest delta is pretty large. So that this line here between what is it, 72,380 and 73,800 is possible. But again, it really is going to depend on between now and the close, and then the overnight, what happens overnight in the sessions. But right now it looks pretty strong. Look at this 3-day. Look at that. Isn't that beautiful? Boom, boom, over those bars. And then here's the midline, and now we're up above it. So we're trying to cross that angular right there, that blue one. But this makes that this fishtail pattern right here. The fishtail goes like this up or like this down. That's the classic, what I call the fishtail, shoot up here or flow this way. So, and that center is right there of that candle, right in that bar. But with that big a buying node up there, I don't know, that's pretty strong. Okay, so here's our 8-hour time frame. See, boom, boom. So this edge here, that 70,325-ish down to 68.7. That's the watch zone here for pullback and how deep that goes. And then that 71,908 is the watch zone for the upper push. All right, we'll go down to our lower time frame now and see how we're doing. We got market buys here and here this morning. So we'll see if they defend them at, here's the point at 73,886, right? 73, am I reading that? Yeah. So we're looking for 71.9 or better on this candle, and then a move towards 72.6.
That 73,886 is from the left shoulder of March 2024.
Okay.
That's crazy. I had that
Yep.
line there. And it's acted as support and resistance on this right whole side since
Yep.
March of 2026. So 2 years later. And that's pretty much our just under our target.
It is. Yep.
First target.
Mm-hmm.
So support wise, that one from the high from May and January. Draw that line through. That's going to be our support. It's down in the 69.5 area. That's a lower support, or upper support is still at 70, just over 71.
Mm-hmm.
It's looking good.
Yes.
Like the 4 hour, 12-hour stochastics overbought a little bit, but it's got room to go up there.
Yeah.
And then,
We're just navigating the ascending angles right now is really what it is.
yep. Just got to give us some time, a little patience.
Little patience. We've been patient for such a long time.
I know. Finally, it
Oh,
moves.
but the other day it was crazy because I mean I could just feel it. So I said, let's get this party started because you know how I'm always a little bit early. But it
Like three
usually
days.
proves
Like
not to
three
be
days.
true. Yeah, I'm usually,
Exactly.
um, 1 to 3 days,
Yep.
but I'm not usually that wrong.
No.
I usually, it usually gets to where my gut says.
I know I do that too. Like you nail. It's funny. Our TA is really close usually. I just don't know how to talk. But
Yes, you
it's
do.
like you mark it on your chart and you're like, we'll mark it on your chart and like, oh yeah, it hits 3 days later. You're like, man, I
Well,
knew
so I
it.
knew it was the 17th. The 17th on my chart was the big deal. And so all of it, everything was lining up for me. Because, anyway. You see how this price action is just kind of weakening just slightly. It's sometimes it's hard to interpret whether or not it's a weakening or if it's a crouching tiger kind of ready for the bounce. So it's hard sometimes to, but for that's why I like to draw these lines and I like to see these markers because this marker is over that 24-minute time frame descending angular, and because it's above that, um, to me that is a more positive sign than not. If we drift under that angle again and then cannot return quickly over 71.5, if it falls underneath that bar, then it's likely that it's just not ready yet. Buyers are a little exhausted. So this zone between where we are right now and that 71.9 is a tricky area.
Yeah, it's like the micros got to cool
Mm-hmm.
down a little bit,
Yeah,
but the higher time frames,
they're still intact, that's for sure.
yeah.
Mm-hmm.
This rounding top on the 15 though. It'd be nice to break out of that before we keep rounding down.
Yeah, that's the little bit of drift, drift. But the lower line did move up from 71,280 to now about 71,410. So see here, we're slightly under that. So this is the 24-minute, and if that 24-minute can recover its midline, which is right here, you see where my pointer is, that pink line coming up from the underside here, that's the bar that needs to be crossed on the candle. See here, here's where we tried to get over that ascending line, couldn't. Now this candle came and wicked up through that line, and now this is the decision whether or not we're going to hold the middle or have to dig deeper again, which would be down to here. That, see, underneath that ascending line. That's why I just talked about that 71.2 is really now 71.4 because of this previous candle there. I know Mike likes Mike, you like the candles more than you like the line.
Top of the morning. What's going on, family? How's everybody doing this morning? Didn't really grab a lot more than that. Huh? Give me a second, I'm just catching up. I got a couple friends coming in from out of town. They're gonna fly with me to New York. So I'm waiting for them to get in. What's good, Mike? Morning, H. Every morning that you wake up is a good morning, gang. Morning, Joe. Yeah, I couldn't sleep because of the finals thing. Nah, I got people coming in from out of town. I go on vacation tomorrow. I got some travel buddies flying in. And we're gonna leave from here. I'm gonna fly to Dubai, go to H's house and try to get her gold back while they're out of the house. H will keep them distracted. Get in that safe. I got you. We'll split it right down the middle, H. For good? You going back home? Or I mean, you're going back to Dubai? I don't know where she lives. I'm not doxing her or anything. Nah, you're too fancy for me. I honestly don't know where I'm going. I very well could end up in Egypt or something. No idea. Oh no, I mean, I don't know where I'm going. Like, I'm not picking. Somebody else is handling the itinerary, and they're being very mysterious about it. I'm like, where are we going? And I get back a freaking simile or a haiku, a damn riddle. Somewhere hot, somewhere cold, somewhere new, and somewhere old. Bring a passport. That was the group text. I know for sure I'm going to the city though. I'm flying to the city on Friday. And then we fly out of Teterboro on Sunday or something. Almost doxed myself and my location all in the same sentence. It sounds like Colombia. It's probably going to be 4 different places, but that makes me think that it'll probably be somewhere in Europe because they're only going to be gone a week. Yeah, I thought the same thing. Simple. Europe's one of the only places you can go to and be in 4 or 5 different countries within 4 days. You know what I mean? Although you could do that in South America too, South America, Central America. But the somewhere cold got to be somewhere else. Well, that's cool. New beginnings. Finally going to graduate from which academy? Your last destination is Hogwarts. Some people have lives other than trolling YouTube chats, bro. Appreciate your concern, though. Nah, I mean, somewhere, I don't want it to be that cold, bro. I'm bringing some cold shit, but I'm not bringing like Arctic weather cold shit. Better not get creative. Give me a second. Let me get this going. Yo. I can't hear you. You got carry on? I'm gonna send the black truck. Yep. All right, H. Guys, it's been almost 48 hours. Surely you heard the reason for the pump, right? It shouldn't be a mystery to anybody anymore. Yesterday, you guys had an excuse, but it's been too long. H, you gonna be there for class? Right?
Yo, Dbloc, if I don't get to talk to you, yo, enjoy your trip, enjoy yourself, man. You know, just keep your head on New York time. You already know.
Appreciate you, bro. Yeah, I'm gonna have a good time. I've been on
Yeah,
vacation, honestly, for like a week already in my head, bro. I'm not even gonna lie. After that last class, my brain was just like, whoop,
nah,
time
you
off.
deserve it though, big.
I appreciate
You
it, bro.
deserve it.
Yeah, 76 could be an option. Daily vectors at 73. The actual measured move for the daily bull flag is at 76 too. But we're not doing targets right now, right? We're trading momentum. So where it could top shouldn't even be a worry. You need to worry about is, are you bullish still or not? I'm leaving them all. Oh, okay. I got you. Yeah, they asked me who I was going to leave in charge. I said H. Everybody got real quiet. Yeah, I'll post some pics if we run into something cool. Hopefully, I won't be bored enough to remember, but I'm sure I'm going to take pics regardless. If not, somebody else will. Nah, but I did tell him that I expect to come back to a list. Because if anybody's gonna snitch, I know it's H. So I better be on your P's and Q's. Well, I hope to leave tomorrow with Market Maker back in the control. Right? If we set a weekend trap tomorrow and it's traditional, then we got to give Market Maker a swing at the week unless he invalidates his false move. So that's 3 days right there that y'all got figured out. You don't need me for. Then if the false move doesn't get invalidated, shit, I'll be back before the next weekend trap. I have faith in y'all. Just spent a whole semester in Cypher school. You're gonna be all right. You don't have to snitch on a high def H. Whatever he said, whatever they said he did it. Like, he's one of those. EOP, hold down. I got a couple plays right now that I'm tinkering with. LB's playing into earnings. I think that they're going to miss Lambridge, but I also think that people are going to try to run it up into earnings. Let me check something before. Yeah. Excuse me. And then I am What are you doing? Thank you. I'm short Moderna on options. I'm shooting for this gap. Not the whole gap. Just to tap it. Yeah, that cancer vaccine. I'm shorting overreaction. I mean, not overreaction. A cancer vaccine is amazing, right? Obviously, but it's in stage 3 trials. Like, it just moved to stage 3, which is good, great, right? But they're not selling this shit tomorrow, you know. Got on Twitter yesterday, and it was Moderna cures cancer. Price goes up and to the right. I was like, there might be a little bit more to this. I mean, feel like that'd have been the first thing I heard on every channel, everywhere at the same time today, if that had actually. But the idea of a cancer vaccine is pretty sick when you think about it. I was talking to BJ about it. It's like polio, right? Like, nobody thinks about polio. People used to die of that shit on a regular. A lot. Ooh. Well, I mean, that shit probably won't start kicking in for a while, bro. She's good. Ghost is like, bro, you messing with my lady's livelihood. Did you talk to her about it? What does she think? What's her opinion about Moderna? Yeah, it was oversold really hard on socials, which it doesn't need to be oversold. It's amazing news as it is. But you know, when you're in position and you're trying to pump some shit, you leave the details out. I didn't know that. Well, actually, yeah, there's like that HPV vaccine, I guess technically is like a cancer vaccine, right? Because that shit could lead to cancer. Yeah, yeah. I would make a joke, but it's 10:50 in the morning. The HPV one's for early. The HPV one you can take super early. The one that they're talking about, Moderna, is for specific cancers. And yeah, you have to, it's a vaccine, so you need to take it while you're healthy. Yeah. So basically something that everybody would get type shit. You can say what you want about vaccines, boy, but vaccine comes out with a big C, I'm gonna take my risk with that one. Not medical advice. Knock on wood, I don't have a big history of cancer in the family. My grandmother was the first one. It's possible, H. That's the risk I'm gonna have to take, though. I'm sorry to hear that, Red. Yeah, I mean, some of the advancements that we're seeing are insane. And I hate to bring everything back to AI, but I mean, not, you know, it's gonna make a big deal. Being able to take the same information that maybe human researchers have looked over a million times and find a different angle or find a different, you know, different correlation that wasn't seen before. Yeah, that's a fact, YG. I don't assume that it would be cheap, you know, but the world is big. The world is very big. Yeah, I'm not about to start giving medical advice, but my grandmother fought it and she had it operated, right? So I was lucky enough to where it was operable. But yeah, we starved her of sugar immediately. Immediately. Operation was great, by the way. She's 100% fine. She's been to a million checkups since then. Yeah, I mean, it's getting that autophagy going, clearing out those senescent cells just to help your body sort of fight. Cutting off the food source and replenishing your immune system. That's great, bro. Just work on your body and perspective too, man. I'm gonna tell you the main reason that everything worked out for grandma is because she was old enough to where we didn't tell her. Like we had a talk with a doctor and we were like, look, until we know for sure there's nothing that can be done, we're not gonna say anything. And he was like, that's good because the perspective has a lot to do with it. Can't stop it, but it can delay things and it can advance things as well. So just make it tough, right? Make it as tough as possible for that shit to stay alive. No, you got my prayers, brother. Me and the guy upstairs kind of tight, for what it's worth. Yeah, did any of y'all see where I put? Freaking excellent. Freaking TRX, bro. That's me. That's me being patient. I'll probably miss this trade. I'll be honest with you, because even if it comes down, it's not going to come down far enough for it to be worth it for me. When it comes to this is one of them. When it comes to some coins, my DCA and my buy zone I have to do with the technicals, But they have to do with how cheap would the coin have to get for me to consider it cheap. Right? If this retraces but doesn't come down to my levels, I'm not gonna buy it in a zone where I think it's expensive. Right? I'll just move that money somewhere else. That's never an issue. BNB is sitting nicely. ETH is, like I told y'all, ETH looks the best out of everything right now. Like it really does. Still thinking it's gonna come down. But what I mean is when you look at the ETH pairs, when it does move, it's very possible that we get an early ETH run. The last time it was sort of set up like this was in 2020. Was it 2023? Hold on. No, it was 2021. Right. So ETH didn't have many relief rallies. ETH had one relief rally during 2021, 2022 timeframe. Like literally. It had this one. And then from that point forward, it literally never took out another high. Like zero relief. You see that? Like here, down here is the first time where you actually like took a high out and it was just barely. Right. But look at what look at what it did compared to Bitcoin. And again, the year ended up like shit for ETH, right? So this is not the point I'm trying to make. The point I'm trying to make is look at what Bitcoin was doing when ETH made that run. Bitcoin bottomed over here. So you get what I'm saying? Like ETH is running hard again, in my opinion, before Bitcoin bottoms. Bitcoin ran, look, there was still, this is probably one of the better bear market rallies that, so Bitcoin, yeah, so 140 days before Bitcoin bottomed, ETH bottomed. And that was the bottom for ETH, right? ETH didn't revisit those bottoms. ETH's bear market was 221 days long. Now, to be fair, this was the ETH convention. So there was a catalyst there, right? One that we don't really have here, except for the chart. Yeah, I'll go look at Bitcoin in a second. Hold on. I just want to check the dates on this. How much time we've been here. Yeah, we're already at 221 would have been somewhere back here. We're still ranging, yo. What time is it? 11. Mm. Looks impulsive. Type 2. on the type 2. All right. Let's see. Let's go get these perps. I need some coffee. Bro, I'm telling you, creatine is magic. I got 4 hours of sleep. I took 20 grams of creatine and it feels like I slept for 8 hours. I'll show you the structural targets above in a second. Let me just get this drawn out. So your type 2, and you had your type 2 on your type 2. The type 2 on your type 2, type 4, and everything super clean. Still waiting for a type 4 here. I would like to see that before hitting target. So daily vector is the target for me that makes sense, right? It's at the big SR and it's a large vector from the daily right here. This is what we're talking about, this vector recovery. Just real quick, I know we've gone over most of this, but since we're talking about the vector recovery specifically, that bear flag didn't break until Bitcoin recovered that daily vector and rejected off the 50 EMA cloud. This bull flag didn't break. This bear flag didn't break until Bitcoin came into its 50 and took out that vector. This bear flag hasn't broken, hasn't taken out its 50. Hasn't taken out its vector, hasn't come into its 50 cloud. So you're saying there's a chance. Guys, what have I always told y'all? You could have the best TA in the world, the best setup in the world. Shit, you could even have insider information that something is about to happen. And somebody with too much money could do something unexpected and completely shit on it. Right? So that being said, your only job as a technical analyst is to figure out what the probabilities are. Right? And as long as you only take high probability trades or high probability setups, then more times than not, it'll play out. Right? So right now, figuring out where this is going to top, right? What helps us figure that out is going into the past, going into history and seeing what's happened before, right? And using that to either put up or bring down the probabilities of something happening. Doesn't mean it has to, right? History doesn't repeat, but it rhymes, all that good shit. But the trend is your friend to the end. Right? And these parts of the cycle, the psychology in these parts of the cycle are exactly the same. The fear, the Bitcoin is dead, the oh my God, it's taken off without me, the all of that shit is exactly the same as every other trader that's been in this position. Promise you. And it probably needs to be said. Again, everybody has their own conviction. But if you feel like we've bottomed and you're being hard on yourself because you haven't bought anything or something like that, like get that shit out of your head, bro. Look at where we're at, right? And a decent retracement, a regular retracement brings you down to 65 or something like that. Bro, you are not going to be crying in 3 years that you missed the bottom by 12% or something like that. Right? I still think we're going lower, but my point is there's no reason to beat yourself up right now in either direction if you're feeling like shit. I'm getting a lot of DMs from people that are like nervous and, and it's like, don't let it affect your trading and ignore the idiots, bro. The idiots that are jumping up and down and dancing and trolling and shit, they're more surprised than you are. That's why they're acting like that. Because unless they're an insider, right, there's no way in hell for anybody to call that. Does anybody realize how serious that Treasury announcement is? That the Fed is 2xing their money printing into bonds? Like that's not a small deal, right? They're literally doubling the liquidity coming into the bond market. People are taking that as weakness. People are reading that to say, oh, the Fed's on their heels, right? They're willing to do anything right now. Yeah. Listen, take all that shit out of your head, bro. If you got to mute people, mute people. This is not the time to let people push your buttons, Bro, even me. If you happen to be in a trade and you're long and I'm looking at it and I'm like, this looks bearish, but your conviction tells you that you're in the right trade and your TA tells you that you're in the right trade and you did everything you're supposed to do. Mute me, bro. Don't listen to me either. But bring it up, because if you see something I don't, I want to see it, But just to make a point. The thing is, if you're in a position, right, especially something macro, you need to have looked at everything that you can possibly look at and be convinced that it's going one way or the other. Right? That way, whenever somebody talks to you about a trade, the only thing they're telling you that you haven't heard before might be something you didn't see. Right? But if they say, oh, it's going down because this, and that, if you've already done your due diligence, it's not going to phase you because you know that, no, that's not what that means. That means this, or that's not what this means. And I know that comes with experience. That's really hard to do when you're early, obviously, because you feel like anybody that speaks confidently just knows more than you do. But I mean, I don't know, but honestly, that's why learning is so important. Because the quicker you can get to where you trust your own TA, or the quicker you can get to where you hear me say something and you look at the chart and you're like, Yeah, I see it. It's right there. You know what I mean? Or no, no. Hold on. You know, do you see this? Maybe did you look at that? 9 times out of 10, I'll be like, yeah, I saw that. That's I think this, and this. But it's a big difference than just looking at a blank, you know, at a blank chart. And it's 1000% doable. Nah, it's always, yeah, you don't want to completely isolate yourself, right? That's not what I mean. What I mean is like, if you find that you're getting on tilt, right? Somebody's getting under your skin, or somebody's, you know, or somebody's really making you doubt your conviction in something, but without any actual proof, just because they keep yapping. Like, you need to get that out of there. Not forever, you know. As soon as you take profit on your trade, you unmute the person. So you know, they're probably great people to chill with on a regular, but there's times where I've had to walk away from the Discord. Discord knows during the bull market, bro. I literally had to just put the mic down and walk away. They're gonna have to because it's not working. But it doesn't. It's September, if I'm not mistaken, September 19th is when it actually starts to hit. But listen, you remember the last trick that they pulled with the yen, right? Where he wrote that note over his shoulder. All right, I'm gonna give you my thesis on this. I've had 24 hours to think of it. Just rock with me. Last week, Bassett wrote a note in front of a bunch of freaking reporters that were over his shoulder, right? Like if he didn't know they were going to see it. And the note said buy 5 to 10 billion yen. Right? We did a deep dive on it. Now, if you know anything about Forex, 5 to 10 billion yen is going to get absorbed in daily trading volume. That's nothing, right? Not enough to save it. But the idea was that it could spark speculation, right? And that 5 to 10 billion would turn into 50 billion or 100 billion, right? As a force multiplier, because you leak it to the press and then people go and get in the trade, right? That was the idea. Well, it didn't work. And not only did it not work, but it stopped some of the bleeding, but it didn't work. Right? And not only didn't it work, but we pissed that money away. So what's the next plan? Well, how about we do it without spending the money? How about we announce to the press? By the way, the press that was told that they would get no forward guidance because they didn't want to affect the market. Remember that? Remember when War stood up there and was like, no forward guidance. We want the market to operate on it. Really? So you just gave us to the 19th? This is one hell of forward guidance. But why? Well, they need the bond. They need the bonds to settle. But if they do it this way, then they see the reaction of people playing the trade. They're trying to affect the market so people play the trade. So why is Bassett coming out now and saying that they might spend more than 4? Why? Because they had 24 hours of chart action. They just watched the chart for 24 hours. They saw that nobody was jumping in, didn't work. There was a slight bump that immediately ate itself up. So now they're trying to pump it more by saying, oh no, we're going to put more. If you back up and look at it, it's an obvious play. It's kind of childish, actually. So now we know Warsh is full of shit, right? There will be forward guidance when it benefits them, and there won't be forward guidance when it doesn't benefit them, which means that the market is going to read no forward guidance as bad news. It's easy. They just They just crack the code for us. When they tell us something, it's good news. If they say no forward guidance, then it's bad news. So get the hell out. It's like the easiest tell ever. I was saying that they told the press, Worst came up there and told the press there'd be no forward guidance, right? And then they came up today and said, oh, we're going to double our quantitative easing into bonds with like a 2-week, 3-week advance notice. Yeah, I can't do anything about it. The better the crowd gets, the more they show their shit on the ads. But if you cut off ads, then they stop promoting you because there's nothing in it for them. So just let them eat. Yep, from September to November, they're gonna pump the market, or try to. September 19th to November 4th ish. When's midterms, by the way? Interesting, right? Guess what else happens right after elections? Trying to get you 20 right now that they raise rates right after elections. Yeah, so my point was it's just Bessett's doing the same thing he did before, right? It's the same as writing that letter and letting the press see it over your shoulder. You're trying to turn your $1 into $10 so you don't have to spend a lot. If your influence can be a force multiplier for your money, yeah, yeah. Good reminder. Tomorrow's, well, it's today, isn't it? I think today's the unlock, the 20th. Yeah, because if I mean, think about it, the type of money that they're talking about, and then think about the double-edged sword here. Yeah, so I'll stop it at 11:55. Think about this. We just tried to help balance the yen, couldn't, right? We offered to do a yen buyback and then went to war in Iran and spend it on missiles. Then we just did that whole thing with Bassett. So how do you help Japan now? Because we still need to help Japan. This is the issue. This has nothing to do with us, by the way. Like, I think they understand very well that that's not going to help stop the bond. You know, it's going to, maybe it'll help keep the bonds underneath 5, maybe. But the bigger deal is who's the biggest holder of bonds? If the biggest holder of bonds is Japan. So this is just another indirect way. I think they know that if they drop the yield, Japan is going to continue to drop bonds. But in getting rid of the bonds, Japan will be able to save itself. We're doing exactly what Japan does, by the way. Remember I told you that Japan's been shitting on its own people for the longest? Like, did you see the Dixie today? Japan's been crushing their dollar or the yen, right? Their fiat for the longest time to prop up this bullshit that we're playing over here. This is why Bitcoin went up. Bitcoin. Inverse US dollar. If DJ sells if DJ sells hoodies for $10, but you have to buy the dollars in Pepin bucks, and MPEPin devalues your dollar by 50%, how much do DJ's hoodies cost? Did DJ's hoodies become twice as good? Did they become twice as comfortable? Twice as, right? So when this happens to the dollar, all hard assets valued in dollars go up intrinsically. Right? It's a direct correlation. Dollars worth less, anything you buy in dollars is going to take more dollars. So the price of anything you buy in dollars goes up. That's my whole Bitcoin thesis. My entire Bitcoin thesis is that I will not stop buying Bitcoin until they stop debasing the dollar. Because every time they debase the dollar, Bitcoin's going to make another level. Right? Even if it's just short term, but in a long term view over the years, right? That's why grandma's house is worth 1.3 mil and she bought it for 40. And it's in worse condition right now than it was when she bought it. She bought it brand new for 40K. Neighborhood hasn't gotten any worse or better. House has only gotten worse. But it costs you 1.3 now. That's what happens with debasement over 20, 30 years. Right? And then they got the nerve to talk about the cost of living went up. Yeah, no shit. All right, we're getting close to refresh time. It says time to take profits.
As always, gentlemen, our profits will be donated.
Don't donate your profits. Only taranttarants donate their profits. Type 4. Volumes are right. Volume's still higher, way higher than here, so it's valid. It's also a nice flag. Aside from fractaling out, you've also got a flag. This should take us into our target, our close, our daily vector. Still has to break out though. Right, so that measured move isn't active until you get a breakout on a retest. More importantly, top of the range, right? But remember, if you consolidate at the top of the range, the chances of breaking it are greater. There are, it at least shows you that there's an attempt being made. Nah, all jokes aside though, has anybody checked on high def? Like, you got to check on your bear friends right now. For September, Lexel? I mean, for August? Yeah, this will be the first bear market August that's ever green, that ever ends green. But the last 2 weeks, last week, 2 weeks of those Augusts have been pretty intense. Like we've had some pretty big drops in the last half. That to me is not as big a deal. September is also a very volatile month. One of the most, in my opinion. I would imagine that everything is probably hovering right now, waiting for Bitcoin to make its move. What's going on, AZ? We are above the fair value, right? Just watch out for the swing fail. We've had 2 swing fails. We just took these. Refresh. Excuse me. Yeah, talk about a flush out of liquidity. Look at the 6 month. That was our squeeze right there. What is that heat? Give me a second. I'm just trying to look at one. My bad. I thought that was the. Just trying to look at one thing real quick. There we go. So I wanted to see if we had taken that 15. All right. Largest liquidation level left above us 73.4. And then after that, all of the big dogs are sort of underneath us. Dealing with 2 value area highs here. Both of them have their point of controls in the same place. Popping volume candle, bearish engulfing, big volume. Rejected off the first value area high, trying to prove that this is a breakout, not a deviation on our yellow range. If it gets accepted back into the yellow range, we see 71.8. So our first step is holding that as a breakout. Remember, if you get accepted back into the range and it turns into resistance, then this is a deviation, and that was a deviation short play. Also, pay attention to absorption, right? Pay attention to the numbers that come across the whale. When you see, all right, so like that one, you just saw 43 Bitcoin sold. This is the candle you got, right? So you keep that as a reference sort of in your head. Look, 20, 20, 20. That's 100 Bitcoin so far. This is the size of the candle that you got on the 1 minute. So if you see like 15 Bitcoin sold and you get a big red candle to the downside, right? Then you know that the book is weak to the bottom. 37 Bitcoin, 17 Bitcoin. And someone bought 1756 and the candle's still bigger than that. So you see what I mean? You can, without looking at the order book, you can tell where the who's got the harder push, right? Who's pushing uphill, basically. And we got a minute for this candle to close, but for now, this is going to be, looks like a deviation above that range. You guys get what I'm saying about the absorption, though? Does that make sense? There's no hard, fast rule. It's just something you have to watch at the moment, you know? Every day is going to be different. Sometimes 3 Bitcoin is going to send it. Sometimes 157 Bitcoin does nothing. Right? That's bullish absorption. That 157 Bitcoin couldn't even break us back down into the range. And that doesn't mean that